Yes, people, a very happy morning to all of you. So, guys, we started with a brand new topic in the last class, which was Accounting Standard 13, which talks about accounting for investments. So, before we start the new concept for the day, let's do a quick recap of what we studied in the last class. The first point, sir, Accounting Standard 13 is applicable to which all entities? Sir, Accounting Standard 13 is applicable, mandatory for all the entities, whether you're a corporate entity or non-corporate entity. For everyone, it is mandatory. However, for non-corporates, which non-corporates? Level 4 entities. For them, disclosure-based exemption is provided. There is certain disclosure requirement. There are certain disclosure requirement in this standard for level 4 entities, which are micro entities. They don't have to follow the disclosure exemption. I mean, disclosure note, they don't have to give. That they are exempted from. Okay, sir. Sir, what is the objective of this accounting standard 13? Generally, AS provides us guidance. So this AS in this chapter, what guidance it is going to provide? So the objective of this standard is to provide guidance on the accounting for investments, accounting for investments, and accounting for income arising from such investments, of how those items needs to be reflected in the financial statement and how the disclosure and presentation also needs to be taken place. So two aspects that we're dealing with: accounting for investment, and second is accounting for income arising from such investment. Generally, all of you know that accounting standard deals with four aspects. So when I talk about accounting for investment, this AS covers all the four aspects of accounting for investment. Means when an investment needs to be recorded, at what point of time, and how the investment needs to be recorded. Second, measurement aspect: how much investment to be recorded. We thought whatever price we pay for buying the investment, that alone we should record. But in the last class, we learned that with that, we add certain other costs such as brokerage, stamp duty, other expenses, which is directly in relation to acquiring of such investment. So this is the measurement aspect, which is telling you how the measurement of investment needs to be done. Then, how are we supposed to present such investment in the financial statement? Should we show that as current investment or should we show that as long-term investment? That guidance is given by AS 13. And how it is to be disclosed. What are all the other information that you have to disclose in notes to accounts? This we are ready to study. So when I talk about accounting for investment, all the four aspects have been covered in AS 13. But when I talk about accounting for income arising from such investments, the recognition aspect, when to record, how to record, is covered in AS 9. Sir, what is the meaning of income arising from such investment? When you do investment, you have the intention to earn return on investment. So the return is in form of interest. If I invest the money in the interest bearing securities, so what do I get in return? Interest. If I invest in dividend bearing securities, what do I get in return? Dividend. If I invest in, let's say, land building, what do I get? Rent or capital appreciation. Even for that matter, if you invest money in shares or interest bearing securities, there also capital appreciation is there. So ultimately, when I say income arising from such investment, means I'm talking about rental income, interest income, dividend income, capital appreciation. So we are talking about that. In that, for interest and dividend, how to recognize, when to recognize, this is covered by AS 9. Interest is recorded on time proportionate basis. Who's saying this? Accounting standard 9 says it. Dividend should be recorded when the right to receive the dividend is established. So when to record, this information is covered by AS 9. The remaining three aspects to some extent is getting covered in AS 30, which is with regard to interest and dividend. Any difficulty? Okay. AS 13 does not deal with these items. I'll be discussing at the end, not now. So meaning of investment. Investments are assets. First and foremost point, investments are assets held by enterprise. No problem. With an intention to earn income. So investments are done with the intention to earn income. Intention to earn income is there. AS 13 does not talk about the actual earning of income. They're telling that if you have intent to earn income, then the money that you invest in that item is called as investment. Intention to earn income. What type of income? Dividend income, interest income, rental income. So these are revenue in nature. Then capital appreciation. I purchased land for 1 crore, sold it for 1.5 crore. So 50 lakh is my capital appreciation. Or other benefits to the investing enterprise. This we'll discuss later. Now, if you do any investment, which you do in the ordinary course of business, if any investment done in the ordinary course of business, we will not consider that investment as investment under AS 13. If I'm a land dealer, real estate developer, I buy land, sell land, buy land, sell land. That becomes my stock. So I can't say that I invested in land. Though in the normal language, when we talk about general language, we say I invested in land. But AS 13 does not consider that as investment. They consider that as something else. If your investment is any in stock of your business, you invested in laptop, you are into business of buying and selling laptop. So we say we invested 50 lakh in the laptop business. So though you use the word investment there, according to AS 13, that is not investment. So any item that is held in the business for the ordinary course of business is not investment. And any investment done in the stock of the business is also not investment. Okay or not okay? Which one? We did so many examples here, no?
Yes, sir. But even now you gave the same stock examples.
No, same. It is linked to each other. Not held for the business in the ordinary course of business and does not include stock in trade. Now you're telling that, can you give a separate example for this? And can you give a separate example for this? Okay. We'll come to this example one by one. Okay. Now, note actual earning of the income is not important. Intention to earn from such income is important. Okay or not okay? Now, quoted investment, unquoted investment. Investments can be quoted, which means their value are listed or available in the open market. So let's suppose if KVA is listed, so what is the stock price of my company? Where will you go and search? Google. If you have any broker application like Zerodha, Grow, Angel Broking, etc., you go and log in and search the script KVA stocks. Automatically, there's a market price of that particular stock given. Such kind of value is called as quoted investment. That is called as quoted investment. If KVA is unlisted public company or private company, do you think my share price is quoted in the market? No. So in case if I tell the share price of my company, who am I? Private limited company or unlisted public company. If you ask, what is the value of a share? If I say 100 rupees, so that is called as unquoted value of the security. Quoted means what? Which is quoted in the stock market, which is quoted in the open market. I can get the information from the market. That is called as quoted. Unquoted means what? Whose values are neither listed nor available in the open market. Example, share of unlisted or private company. Share price of unlisted or private company. Quoted and unquoted investment. Any problem in this? Okay. Examples of investment. Interest-bearing debentures. Interest-bearing investments such as debenture, bond, fixed deposit, etc. Then we have dividend-bearing investments such as share, mutual fund, etc. Then comes certain type of asset such as land, gold, Bitcoin held as investment with the intention to earn capital appreciation. These are the examples for investment. Any problem in this?
No, sir.
Now, examples do we need to go through or manageable? Okay. I have to come back and explain you what is the meaning of fair value and market value. Though I gave a brief discussion, but I told I'll be discussing this in the next class. So today I'll be discussing. Before that, let me discuss or revise some other points and come back. Classification of investment. Investment that you do has to be classified either as current investment or long-term investment. Either current investment or long-term investment. Now, what is current investment? A current investment is investment where the investment is done with the intention to hold not more than 12 months. I'm purchasing today. I don't have the intention to hold it beyond 12 months. I want to sell it in 2 months, 3 months, 8 months, 9 months, 10 months, maximum 12 months. This intention, generally, we have to see on the date of reporting. On the date of reporting, when the balance sheet is prepared. Generally, that day we have to see. So on the balance sheet date, if you feel that as an auditor, I'm asking my client, what is your intention with this investment? Do you want to sell it in next 12 months or beyond 12 months? If he says, no, I want to dispose this off, man. In next 3-4 months, if I get a good rate, I will dispose. So if his intention is to dispose in next 3-4 months, then I will classify that investment as current. Otherwise, long term. Then, sir, why is it so important that we have to classify the investment to current and long term? Why? Because AS 13 says that if you are classifying your investment as current investment, the valuation of this will be done in a different manner. And by chance, if you classify your investment as long term, then the valuation of this will be done in a different manner. So valuation wise, it will be varying. So it is very important to classify your investment properly. So AS 13 says that always current investment at the end of the financial year should be valued and recorded at the lower of cost price or fair market value. Fair value, market price, both are different. Technically, both are different. But from the examination point of view, both are considered to be same. Now, investment should be recorded. Now you buy the investment. You record the investment at the cost of investment. What? Purchase price of the investment plus brokerage plus stamp duty plus other expenses, all put together cost of investment. Now this is the value of the investment reflecting in your balance sheet. This is the value of the investment reflecting in your investment ledger. This has to be reviewed. Who's saying that? AS 13 says that you have to review this at the end of the year, compare with the market value. If the cost price is 10 for the investment and the fair value is 12, you will let the investment be at 10 rupees. Investment is valued and recorded at cost price or market value, whichever is less. So which is lower? 10. So 10 will continue to be the value of the investment in your ledger as well as in the balance sheet. Sir, 10 lakh worth of investment. Now 12 lakh it is no. 2 lakh profit no. Correct. But this profit is unrealized profit. No accounting rules and regulations, including prudence concept, says that record your anticipated income. Forget standards. Let me ask you, common sense. Will you forecast your income, record income, and pay tax on that? No. So which person, even if standard says to forecast, will anybody forecast? You have to come out with such rules and regulations which is acceptable by people. Just because accounting standard is saying, which is not saying, but in case if standard says that no, you have to anticipate income, record, nobody will follow that standard. Because in business, you have to be prudent. Prudent means what? We'll record for all anticipated expenses, anticipated losses. We'll try to be a bit more pessimistic, but never be too much optimistic in business. So just because 2 lakh profit you have earned, it doesn't mean that you have to record it. This will be recorded only when it is realized. When do you realize it? Upon selling the investment. So unrealized profit you will not record. On the other hand, imagine the fair value of the investment is 8 lakh rupees. 10 lakh you have invested. Now it is 8 lakh rupees. Fall in the value of the investment by 2 lakh rupees. 2 lakh rupees reduced. And this is current investment, which means you have an intention to sell this in the next couple of months. Generally, we believe that current investment value, once it falls down, to get back to its original value, it is not that easy. So we take a pessimistic view that it will not go back to the normal value. It will not go beyond 8, it will not go beyond 10. With that pessimistic approach, we believed to capture this loss in my books of accounts. We try to be prudent here. 10 lakh is what you've invested. Now it is 8 lakh rupees. So fall in the value of the investment by 2 lakh. So this is loss. Which loss? Unrealized loss. Prudence concept says that capture the unrealized loss. Now capturing this is not that easy. You have to justify this, why you are capturing it. Because if you're recording 2 lakh a loss, whatever the profit is there from the business, it comes down. Loss has the impact of reducing the profit. If profit reduces, tax reduces. So it is not easy to be that much prudent as you are thinking. So you have to substantiate as to why this loss is getting booked. If you're not substantiating well, in accounts you might record as loss. In tax, it will be disallowed. Are you able to follow? So accounting rules and regulations says that whenever you prepare any standard, whether accounting standard, Ind AS, IFRS, have the prudence principle in that standard imbibed. So we'll take a conservative view, prudent principle we follow. Hence, you record investment at 8 lakh rupees. So investment already in the ledger is 10 lakh. To bring it down to 8 lakh, what is the journal entry that I have to pass? Investment have to reduce. Investment is asset. Asset is debit balance. To increase asset, debit. To decrease asset, credit. Investment is credit. Debit, directly P&L. Or you can create a ledger called as loss and fall in the value of the investment. Any ledger you can create. That being nominal account, you close it by transferring to P&L. So they didn't give two entries here. In AS 13, they gave only one entry, P&L account debit. In real life, if you want two entry to pass, like how you do for sales, expenses, you pass one entry, then you transfer to the P&L account for by way of closing it. That we also can do. But in exam, to save time, directly we'll do P&L to investment. Any objection in this? Okay. Whereas long-term investment is always recorded cost price. But there's one star mark here. You will observe the value of the investment at the end of the year. If the value of the investment is falling below the investment value, that is the cost price is 10 lakh, fall in the value is let's say 7 lakh rupees. 7 lakh it fell by. So what is the value of the investment now? 3 lakh. If this 7 lakh what is fell by is permanent, if you don't believe that this rate will ever get recovered, then AS 13 says that you have to create the provision for the fall in the value of the investment. So how that is to be done, we'll discuss when the right time comes. Calculation of the cost of investment. This is the purchase price of the investment. What is X interest? Forget now, I'll be discussing today. Purchase price means the amount that you paid to the people to buy the investment. So I purchased 1000 debentures by paying 92 rupees. So 1000 into 92. 92,000 is my cost price. Now, generally, here when we discuss about those kind of securities which are listed in the stock market or securities market. So if I want to buy debenture of Tata Limited, I can't go and buy it from the company directly because the company is appointed the brokers through whom we'll buy and sell. So which means if I want to buy this 1000 debentures of any company, I can't go to that company directly. I will rather approach the brokers. Now, when the broker is getting this transaction done for me, will he do this free of cost or will he charge money? 100% will charge money. You buy any mutual fund also. You buy any mutual fund through any broker, he will charge commission on that. I'll be able to follow. So that commission or brokerage that you pay on the buying of the investment, AS 13 says that add it to the cost of investment. You have to add it to the cost of investment. Any expenditure incurred, right from buying of the investment till the investment buying is completed. In between, to acquire that whatever investment you're doing, everything should be capitalized to the investment account. Likewise, stamp duty and taxes. While buying or buying the securities, you have to incur some stamp duty and taxes. Even if you're buying any land, you can ask your parents if they're buying any land, they will pay stamp duty to the local government. Tamil Nadu, they'll pay the stamp duty charges. Like that, you have other taxes also. These taxes are non-refundable. On this input cannot be claimed. So any taxes, any duties, any stamp duty, whatever you pay, on which refund cannot be claimed, on which input cannot be availed, you have to add it to the cost of investment. Then, if there is any other expenses related to acquisition, for example, I gave you an example for buying land, you have to get the documents verified or vetted by a lawyer. So, legal fee that you pay to the lawyer who's verifying the documents, that lawyer fee will be a part of the cost of investment. You will capitalize it. All of these put together is called as total cost of investment. I am putting one star mark against brokerage and one star mark against the stamp duty and tax, because calculation wise, you'll have some complication in these two items. And I'll be covering that topic today. Till this, we had a discussion in the last class. Tell me, okay, not okay. So whatever I discussed so far is completely the revision of the last class. If you're okay, I will like to go to the next topic for the day. Wonderful. Now, sir, often we come across the term market value and the fair value in this chapter. So what is the meaning of market value? Market value is the amount obtainable from the sale of investment in an open market. So there is some open market. The value of that investment is obtainable from the open market. Net of expenses necessary to be incurred, or okay, this is fine. Mainly, what is the explanation of this? So this line is given in your AS 13. AS 13, if you open the document, if you read the line, this is the explanation given for, meaning given for market value. Now, what is the explanation for that? Market value is the price at which asset or investment can be bought or sold in the open market and active market at any given point of time. I want to buy the shares of Reliance Limited. From where should I buy it? Stock market. What is stock market? So stock market is a platform where a lot of traders, lot of buyers and sellers, they try to sell the shares what they have and that which we intend to buy from them. If I want to know price of that, if I want to know what is the price of Reliance Limited, do you think I'll make a call to Ambani? Mr. Ambani, please tell me the price of your shares. Where will you go and ask? First to Google. Google, what is the price of Reliance Limited? People who do investment, they'll not ask Google. They'll go and search in the app. So if I have my stocks and shares in Zerodha, I'll go and search the script name, Reliance Limited price. If I put RIL, the price of that, today's price of that will come. Gold if you want to buy. Gold if you want to buy. Whom do you call? Ministry of Gold? Do you call the shopkeeper? No. You go and check the rate in the Google. Approximate rate will match. Here and there, few rupees will be changing, differing from city to city. But still, Google will give you almost 99% precision to the exact value of the gold that has been traded today in the market. So there are certain items, certain investments whose value is very clearly, visibly available in the market. So market decides the value of that product. Hence, we call this market value. The value of such investment is readily available in the open market. We trade at that open market price. We trade at that market value price. That is called as market value. Any problem? But there are some investments which are not listed anywhere in the open market. For example, you have a land. You want to sell that land. Which website will you go and check for the land price? respective state have their price, but that price is called as guideline value. RSPRM, example I'm telling you, RSPRM ka market value, let's suppose, or fair value, rather I would say not market value, the right term is fair value, it is 1.5 crore %. The guideline value will be 50 lakh. Means when you do registration of that particular land, the taxes that you pay is on the guideline value. But the real fair value, the transaction value generated is more than the actual value. I mean, more than the guideline value. The transaction value that you incur, the buy and sell price is generally more than the guideline value. Correct. No? So let's suppose you have a land in RSPuram. You want to sell it. You are saying 1.5 crore. From where did you get that information 1.5 crore? Is it listed anywhere in the stock market? In any other platform, website, like how the value of the gold shares are listed, like that? Can you go and search anywhere? What is the market rate of land in RSPuram today? No. Then how do you determine the value? Based on the experience, based on what other transaction that is taken place in that particular area. So an adjacent landowner has sold that for 1.5 crore. So you presume that okay, somebody is buying for 1.5 crore, means what worth is now that much. So fair value is that value which the buyer should offer fairly. Seller should offer fairly, and the buyer should accept it fairly. The value of the land is 1.5 crore. You're asking 3 crore rupees. Fair or unfair? Unfair. Even if you try to quote it, will the opposite person buy? No. So fair value is that value which you fairly inform to the opposite party, and which the opposite party accepts it and he agrees to buy that from you. So it is a value that both of you agree to buy and sell. A value which is fair to be sold by the seller and for the buyer to be paid for buying the land. That is called as fair value. So fair value is the amount at which investment could be exchanged. Investment could be exchanged means what? Bought and sold. Between the willing buyer. Willing buyer means what? The buyer is willing to buy and the seller is willing to sell. Both knowledgeable and unrelated. Both knowledgeable means what? Both should have a fair idea about what is the market price. You have to be reasonable. You can't be unreasonable. Just because I want to sell my land, I'm the owner, I can't quote 3 crore rupees %. If the market value means at par, everybody else is quoting nearly 1.5, 1.2, 1.3 crore, you can be something or somewhere around that, but not too much away from that. So fair value should be that value where both of them have a genuine knowledge of that particular value. The real value is 1.5 crores or around 1.5 crores, but you sufficient knowledge? No, you're being unreasonable, like an unknowledgeable person. So the fair value should be that which a buyer is willing to buy and seller is willing to sell at, both knowledgeable, and these both should be totally unrelated. That is, the transaction should happen on the arm's length transaction. Now, what is the meaning of arm's length transaction? I'll tell in some time. Explanation. This is the language given in your AS13. I try to make it more simplified. It means what? Fair value represents the reasonable estimate of value. So fair value is not the exact market value. Market value means what? If I want to buy this share, if the market value of Reliance Limited is 1,000 rupees, 1,000 I have to pay because that is actual value at which I'll buy and sell. Fair value is never the actual value. It is a reasonable estimate in the absence of the active market price. Reliance Limited ka stock is listed in stock market. That is called as active market price. Means the price which is readily available to me in the market. That is called as active market price. So here, fair value represents the reasonable estimate of the value in the absence of active market price. There's no active market for such items such as land, building. It represents the reasonable estimate of value in the absence of active market in a fair transaction between the informed but unrelated parties. In a fair transaction. So the transaction you want to be fair means what? The value of the land is 1.5 crores prevailing in that particular area. Somewhere in the range of 1.2 crore to 1.6 crore would be the reasonable fair value which one can expect to sell and buy it. So this can differ from people to people. This can differ from people to people. Now the question is what is the meaning of arm's length transaction? I'll do first example, then I'll come back and do the meaning. Example of arm's length transaction. Mr. A sells a flat to Mr. B and both of them are total stranger to each other. For 50 lakh, after both of them negotiated, they agreed at a price of 50 lakh rupees and agreed based on the existing predicted market rates or fair value. So now A wanted to sell this flat. Obviously, he would have said 60 lakh before. Then B would have said, no, I'll give 40 lakh. Then they inquired in the market, nearby areas, what is the rate that the flat has been transacted for. So then They negotiated, both the parties negotiated, and finally they settled at 50 lakh rupees. So this is fair value. Considering what is going around in the market, you have taken a stance that, okay, let's agree at this price. And here in this transaction, both were totally stranger to each other. One had no dominance over the other one. If the dominance is there, then we say that there is no arm's length transaction. There should be no dominance between both of them. Both should be independent. Means what? Buyer is completely independent to decide whether to sell or not sell. Sorry. Buyer should be completely independent to decide whether to buy or not buy. Seller should be absolutely independent to decide whether to sell or not sell. There should be no any undue influence. That kind of transaction is called as arm's length transaction. Arm's length transaction. Arm length. If any person has got the influence on the other party to sell, then we call that as no arm's length transaction. So this in depth you'll be discussing in probably CA final. Do you have this in tax? Not come across so far? Okay. This is arm's length transaction because at fair value, two total strangers have been discussing this. So what is arm's length transaction? An arm's length transaction is a deal between two unrelated independent parties who are each acting in their own self-interest. Buyer is trying to negotiate to get the property in the lesser price because that is what we do. No, buyer wants to get at the lesser price. Seller wants to sell at higher price. So all of them are acting for their own self-interest without any pressure or influence from the other party. There is no influence from other party. If influence is coming from other party and if the transaction takes place, then we will not call that as arm's length transaction. The terms and pricing of the transaction are fair and reflect market value, just like it would happen between two strangers in open market. So if such kind of transaction takes place, you call this as arm's length transaction. Okay or not okay? So fair value, market value, clear, not clear? Okay. Now, AS 13 gives you the accounting guidance with respect to two types of securities. Please tell me, investment is done. Investment is done by any enterprise with the sole intention to earn income from interest, dividend, rent, capital appreciation. My question to all of you, when you want to record entry for rent, do you have any problem? You've been doing very comfortably since 11th. No? If rent is received, what is entry? Cash or bank account debit to rent income. If rent is accrued, what entry? Accrued rent to rent. Now, if I ask you this question, do you have any doubts in this? Which means in the accounting for rent, there is no complication. Similarly, capital appreciation. I purchased one land for 10 crore, sold it for 12 crore. How much is the profit? 2 crore. Is there any difficulty in recording this transaction? What is the journal entry for selling the land at 12 crore rupees? So bank account debit 12 crore. 2 land 10 crore, 2 profit on sale of land 2 crore. So with regard to rent and capital appreciation, there is no complication. So AS 13 has not spoken anything about these two in the AS 13. However, when it comes to interest and dividend, there is a lot of complication involved. So AS 13 is going to give you specific guidance on interest and dividend. So there are two broad concepts which has been covered in AS 13 from the examination point of view. First is how to do accounting for investment in interest-bearing securities. How to do accounting for investment. Which investment? That investment which has interest-bearing, which is interest-bearing securities. Second, AS 13 is being guiding us how to do accounting for investment for dividend-bearing securities. In exam, either of these two only questions will be tested upon. So we'll take roughly around 2 to 3 classes to be done with this and 2 to 3 classes to be done with this. Am I loud and clear? So my today's discussion is going to be restricted to how to do accounting for investment in interest-bearing securities. Are you all ready? Yes, to be very honest, AS 13 in general is considered as one of the challenging AS compared to all the other AS. It is considered a little bit challenging. Why? Because people don't understand this concept in true spirit. They try to by heart. They try to deal with the question in a way that they want to mechanically apply the thought process. They don't want to understand the learning of it. The two terms which generally scare people in this chapter: X interest, come interest. X dividend, come dividend. So these are the two haunted words, rather I would say, because of which people lose the interest on this particular topic. But I'm telling you, this is one of the most easiest topic, easy to understand, easy to score also. But I want your complete attention to this matter. So now let's talk about investment, how to accounting for investment in interest bearing securities. I would like to take one question to do the explanation part. Example one we have discussed already in last class. So example one, what did we speak about? Classification of investment. So I gave you one question. I asked you whether it is current investment or long-term investment. And I told you the maturity date, the maturity date of any investment is not the deciding factor whether it is long-term or short-term. It is the intention on the date of 31st March, on the reporting date, what is your intention to hold or sell? That is the basis to decide whether it is current or non-current investments. Second example, we did valuation of current investment. It is valued at cost price or fair value, whichever is lower. So with example, I gave the description. So in this question, what can you find? What can you learn? So besides the example, I gave you the information in bracket that in this particular example, what are we going to learn? Example 3, what did we learn, people? How to do valuation for long-term investments. In example 4, what did we learn? How to calculate the cost of investment without the interest concept. Today I'll be discussing with interest concept. So how did we learn the calculation of cost of investment? So we learned that purchase price, add brokerage, add stamp duty, that is the cost of investment. So I'm trying to take the difficulty level gradually up. You will not get this standalone question exam. With this, lot of mirchi masala will come. X interest will come interest will come, sale value will come, fair value will come. So we take ICA question, the very first question that I'm going to deal, it is called all the component. If I take all the 5 complicated transactions in one question, your base will be completely destroyed. So it is very important that each component separately we have to understand. Individually, when the foundation has been laid, totally when we do the sum, it becomes easy to understand. So I felt many students who feel that this topic is tough, they approach this question with the bigger, tougher questions, where all the transaction one shot they cover it. That is when it makes it more difficult to understand. So I try to break this into multiple examples. So each example is going to give you one learning. At the end, we'll summarize into combined comprehensive questions. Now, let me take you to example 5. Here, what are we going to learn, sir? We are going to learn how to calculate the cost of investment with X interest concept when the interest date and the book closing date is same. Now, all this you will not understand. What this you don't know. What is this also you don't know. Everything I'll explain through this concept. Let me read the question for you. Ram purchased 500, 8% bond of 100 each at 97 X interest on 1st September 24 of X Limited from Sham. This is one line. This is one line. Good enough to bring you down because it's got so much of information to it. If each and every word is not paid attention to, the question could be screwed. Sakshi, you come, friend, no? You're struggling from there. I guess. यहाँ पे भी जगह. I have a lot of questions from the first line. Who is buying from whom? Think and respond. There are 3 parties. Ram is one party, X Limited one party, Sham is one party. 3 parties involved together. Ram is buying from Sham. So who is the buyer? Ram. Who is the seller? Sham. Okay. What are they buying and selling? Bonds. 8% bonds. What is bond? Interest bearing investment. Invest bearing security. Debenture is security. Bond is security. Share is security. So this is interest bearing bonds. On bonds, you get fixed interest. So whenever a security is given and prefix to that, we have percentage, which means what? That much is your yearly earning. Yes, interest, but yearly earning, per annum earning. So between Ram and Sham, there is an exchange of 8% bond going to happen. So which means Ram is going to buy bonds from Sham. This bond is issued by whom? X Limited. X Limited. So X Limited is company like Tata Limited, Reliance Limited, like that. X Limited is company. X Limited issued this debenture. Why? Because they wanted to raise the funds. There are 2 sources of raising the funds. One is equity source, one is borrowing source. Bonds is one of the ways of raising the debt in any company. That is, borrowing has to be raised. That is in form of bonds. Okay. What is 500? Quantity of debentures, number of debentures, quantum of debentures. Okay. 8% is what? Interest rate, coupon rate, right? Bond is one type of security. What is 100? What is 97? 100 is the fair value, face value, rather I would say face value or nominal value of that particular script. All of you are familiar with what is face value, nominal value. You've been studying since 12th standard. Share capital topic, debenture topic. So all of you know what is face value, nominal value? Yes. What is 97? This is the purchase price. This is the price which Ram is going to pay to acquire the debenture from Shah. 100 rupee worth of debenture is being sold at 97. Obviously, Sham is not selling this at loss. He can sell it at loss, but generally he'll sell at profit. So can I say Sham would have purchased this at somewhere at 90 rupees? He purchased at 90 rupees. Now he's selling at 97. So he's making a profit of 7 rupees. So here the debentures are issued at discount. When the issue price of debenture is less than the face value, we call that discount. Sorry, debentures or bonds issued at discount. Not debentures, bonds issued at discount. Possible, not possible? Possible. Now, what is X interest? This I have to explain. So I will take some time to explain. Leave this. Let's go to next point. So first point, are you clear with the meaning of each word? And this purchase is happening when? On 1st September 24. Dates is very important. In this entire chapter, date will play very, very significant role. The dates are not understood in true sense. Your entire calculation will go wrong. Second line says that he means what? Ram paid brokerage at 2% and stamp duty at 1% on the transaction value. And other expenses 500. Brokerage, which means Ram and Sham are buying from each other, but they're not buying directly. There is one broker. So Ram is approaching the broker and broker is approaching the party Sham. So Sham through broker is selling it to Ram. So Ram is buying through the broker from Sham. Of which companies? Bonds and debentures? X Limited. Okay. Now, when this person is acting as a mediator between two parties, will he do his service free of cost or will he charge any money for it? He will charge money for it. That charge is called as brokerage. Brokerage is always paid on transaction value. Transaction value. What is transaction value? The value that is getting transacted between Ram and Sham through the broker is called as transaction value. So one more time. The value that is getting exchanged between Ram and Sham through broker. Through broker. So broker will tell that this is the price. This price is quoted by broker. To whom? Ram. So any value that is being exchanged between Ram and Sham through the broker, that is called as transaction value. The value which is being negotiated by the broker between two parties is called as transaction value. Or ultimately, when the broker is making these two parties meet, no, they'll agree on value. At this value, they transact. That is called as transaction value. My question to all of you, brokerage has to be paid on what value? On the transaction value. So value at which the money is being exchanged between the buyer and seller, which is happening through the broker. That value has to be taken as a base to calculate the brokerage. Any problem? Then comes stamp duty. Stamp duty is the money that you pay not on the transaction value. You pay on the purchase value. Sir, purchase value, transaction value, both are different? Yes. In this question, not different. In next question that I'm going to discuss, transaction value is not going to be equal to the purchase value. I'll be discussing in some time. Stamp duty means this is the tax duty that you have to pay to government. Brokerage is the commission that you pay to the broker. Both are different. Two different parties. Okay or not okay? Online people, okay or not okay? Others, please open your mouth and respond. Because if I don't understand that each and every word is understood, then I'll not be able to comfortably explain. So please open your mouth and respond. 1% stamp duty is on the purchase value. I'll tell all that, don't worry. At least 20 times I will tell before I complete this chapter for you. Brokerage is on the transaction value. Stamp duty is on the purchase value. Both are different. When the right time comes, I'll explain. Don't ask now. I will tell. Everything I'll take care of. Other expenses 500. Any other expense 500. कुछ भी मत पूछो. Purchase value, transaction, nothing. Don't ask. I will take care of it. It's my responsibility. I will take care of it. Don't ask anything with regard to the calculation of brokerage and stamp duty. I have got ample number of questions to get it covered. I will repeat it until you die. I'll repeat it. I'm telling you. போதும் சொல்றாரு. கண்ண தண்ணி வர வரைக்கும் repeat பண்ணிட்டே இருப்பேன். So don't get panicked. I will ensure that you are harassed by me. Interest is paid half yearly. Oh. Interest is paid half yearly every 30 September, 31st March. Sir, I'm not able to understand who's paying interest to whom. Oh, since I purchased from Sham will pay interest to Ram. Then company will pay interest. Company will pay interest. Okay. And company is paying this interest twice in a year, not one time. 2 times a year they're paying. So what is the interest paying date? 30 September, 31st March. Wonderful. So what is the requirement of the question? The requirement is to compute the cost of investment as on 31st March 25. 31st March 25. When are we buying investment? 1 September 24. We want to know what is the cost of investment. Not just that. I also want to know how the journal is done. I want to know how the ledger is presented. Everything will do. But before that, I have a query. Before that, I have a concept to put in your head. Let me draw a timeline. In this chapter, if you want to comfortably score, you cannot score it without drawing the diagram. So you have to be a pro artist like me. Like how I do diagram, all of you have to do diagram. Timeline is which financial year? 24-25. Please do it along with me. Year begins with 1/4/24. Year ends with 31/3/25. Who's the like mouse talking in between? Ah. Wonderful. Can you please tell me the due dates when the interest start to be paid? Very good. So I'm putting this in danger mark, red symbol. Dangerous date. 30 September 24 and 30 March 25. So these are interest date. Okay, sir. Okay. Apart from that, is there any other date? So one more important date. The date on which the transaction is executed. Buying and selling is executed. 1 September 24. 1 September means before 39 or after 39? Before 39. Are you sure? Okay. So you say. So 1 September. 1 September 24. Date of purchase. What are we buying? 500 8% bonds or debentures at 97, whose fair value is 100. Any difficulty so far? Now the difficulty will come. Who are you? No. Ram is Ram. You are not Ram. Who are you? Company. X Limited. My question to all of you. You are a company. You have been given 2 dates. On 30 September, 31st March, you are supposed to make the interest payments. Before 30 September, that is between 1/4/24 to 30 September, there are so many people who will be buying and selling the debentures or bonds of your company. In our example, same thing happened. From 1/4/24, from 1/4/24, from 1/4/24 to 1/9/24, who is holding the bonds of your company? Who's the holder of? In this period, Sham is holder of bond. Okay. Mike, nobody's talking when I'm talking. Shh. From 1/9/24 up to 39/24 and onwards, who's holding the bonds? From this period onwards, from this date onwards, Ram is holder. I will talk about the interest calculation after 30 September later. First, let me talk about this period. Which period? 1/4/24 to 30 September. My question to all of you, in the current year, you're paying the interest on 30 September and 31st March. Prior to this, when was the last interest paid? The previous interest was paid when? I'll take the previous year. 31st March 24 was the interest done. Which means from this period to this period, Sham was holding the bonds. He gave some amount to the company. Whose money who was enjoying? Sham's money company was enjoying. Can company enjoy that money free of cost? No. For enjoying that money, they have to pay interest. So whatever amount Sham gave to the company, for whatever period he gave this money for, up to 31st March, he already got interest. Tell me yes or no? Yes. Who? Sham. Which means up to 31st March 24, whatever investment Sham has done in that company, for that interest he's already got. Okay. In the current year, from 1/4/24 up to 1/9/24, Sham has invested this money in that company for how many months? 5 months. That is from 1/4/24 to 30 September. In 6-month period, what is Sham's holding period? 5 months. You have been holding for 1 month. So on 30 September 24, if you go and check your bond holder list, debenture holder list, means every company will have a list called as debenture holder list or bond holder list. In that list, what is there? Name of the people who are the owner on the date of interest payment. When I'm making the payment, when I'm making the interest payment, when I sit and do the interest calculation, I will get one list from my company telling that these are the owners of the securities as on 30 September. My question to all of you, you are a company. You have to make the payment on 30 September. To whom will you make the payment? Wait, I'll give you 3 options. Sir, I'll make the entire payment to Ram. Means from 1 April 24 up to 39/24, I'll make the 6 months interest payment to Ram. Or I'll make the full payment to Sham. Or I'll make, you means company, I means you means company. Sham will get 4 months interest from the company, 5 months interest from the company, and Ram will get 1 month interest from the company. Which means company is transferring 5 months interest to Sham, 1 month interest to Ram. Can somebody call Anita ma'am? You are company. You have to pay the interest. You have to make the payment of interest. Will you make the payment entire money to Ram? 6 months interest. Please understand, the previous interest paid was when? Previous interest paid was on 31st of March. Next interest payment is 30 September. So I have to pay how many months interest? 6 months interest we have to pay. 6 months interest we have to pay. You as a company will pay this entire 6 months interest to Ram, full to Sham, or partly to Ram, partly to Sham. Think and respond. Sham has held this investment for 5 months. Company has enjoyed whose money? Company has enjoyed whose money in April, May, June, July, August? Sham's ka paisa. You are telling that I'll give the entire money to Ram. Think and respond. One second. That is the purpose of? That is the purpose of buying the bond, which means somebody else's money, somebody else's interest, you will enjoy. Oh, like that. Imagine, Subiksha, you are Ram. Sorry, you are Sham. April, May, June, July, August, 5 months, company has enjoyed whose money? Your money, Subiksha. Now Sam is Subiksha. S for Sham, S for Subiksha. Subiksha, you give 5 months money to the company. Interest who should get? You should get. But that interest is going to Ram. That extra knowledge you should not share. I am asking what question, that alone you reply. Don't put your extra knowledge into it. Wait. Shh. I am asking a very simple question. On the date of interest, company has to pay interest. Company will pay interest to whom? Company will pay the interest, not to Ram. Company will pay the interest to that person whose name is reflecting in the debenture holder or bond. Bond holder. That is the keyword. Every time when the company makes the payment of interest, they will make the interest payment to those people whose name is reflecting in my register. Which register? Bond holder register or debenture holder register. As on 30 September 24, touch your heart and tell me whose name is reflecting there. Ram's name is reflecting there. But Ram, in the 6 months period, has contributed the investment only for 1 month. He has helped the company only for 1 month. Whereas Sham is held for 5 months. But on 30 September, you are telling the entire 6 months interest will come to whom? Ram. So Ram is going to get in his bank account 6 months interest. Whereas actual money belongs to him is only for 1 month. So which means 5 months interest extra is getting. So this interest he has to pay in advance to whom? Sham. So which means on 1 September 24, when Sham is transferring the money, no, Sham will not, sorry, when the Ram is transferring money, means purchase value of the debenture, with that he also has to transfer interest. So which means on 1 September 24, Sham is getting two amount. One is getting the value of the bond. How many bonds is selling? 500 bonds into the purchase value. Plus he'll get interest. Without that, he will not even sell. If you tell, no, give me bond now. Later, on 30 September, when I will get interest, that time I'll give you money back. He'll say, get lost. Because once you sell it, you don't know where is Ram sitting. Sorry. You don't know where is Ram sitting and where is Sham sitting. Ram is sitting in North India. Sham is sitting in South India. They don't even know each other. They don't even know. Sorry, sitting. S-I-T-T-I-N-G. Sitting. Both of them don't know each other. So if Ram says, no, once I receive the interest, after that I'll pay the interest, do you think Sham is a fool? Absolutely not. So unless until you make the payment of interest, the opposite party will not sell the bonds, debentures or securities to you. Do you find this fair or unfair? Tell me. Fair, unfair? 100% fair. 100% fair. Now, Ram has to pay 5 months interest to Sham. From 6 months interest that he's going to receive. Because on 30 September, he's going to receive interest of April to September of 6 months. In that, he has to pay interest of April to August to Sham, so that he'll be left with the interest of the month of September. 1 month interest. Okay, not okay? Okay. Now, listen to me very carefully. This broker is that person who cracks the deal between the buyer and seller. Ram, Sham. So between Ram and Sham, they'll agree one value on which the bonds has been transacted. The debenture has been transacted. This value which broker cracks between Ram and Sham could be a value of cum interest or X interest. Means what? X interest means excluding interest. Cum interest means including interest. So here, if they say the value of the bond per bond is 97, X interest means what? In this 97 rupees, interest component is not factored in, it's not calculated in. Okay, not okay. If they say 97 is cum interest, in this 97, the interest element is already factored. It is already been included.
This is that interest which.
Don't ask anything. Please. Correct. Everything I'll explain. If the value that Ram and Sham is agreeing through the broker, this is called as transaction value. The transaction value 97 is X interest, means what? This is purely the purchase value. Then interest, who will pay? Interest, Ram will pay to Sham separately without broker. Oh. When the broker is transacting between Ram and Sham, when the broker is getting the transaction done between Ram and Sham, they'll agree one transaction value. If the transaction value is X interest, means what? Between Ram and Sham, this 97 rupees is purely purchase price of the investment. Then interest Ram has to pay. No, yes, he has to pay. He will pay this separately to Sham, not through the broker. Are you able to follow? Not able to follow? My question. Okay. I'll give one more example. Land. I want to buy a land in particular area, but I'm not familiar with what land is available in that area. Rate is still we can negotiate. We can discuss, we can get the information. But I don't know in that big area who is selling the land. I don't know. I cannot go and knock each and everybody's no. Are you selling land? Are you selling land? Are you selling land? I can't start with the hoarding. No. I want to buy property in your area. Come. So I will approach in a decent manner to whom? A broker. I will give my requirement to the broker. Take that, boss, this much area of land I want. This much should be frontage. This should be the facing. Vastu prakaram ella margano. And you give your desire to that fellow. He is getting you one land which you're liking it, and between Ram and Sham, it has been dealt with. So Ram has agreed to buy land from Sham through this broker at a transaction value of 1 crore. At the transaction value of 1 crore. Okay, not okay. Okay, not okay. Okay. Now, later, Ram and Sham got to know each other. After this transaction, Ram and Sham got to know each other. On this transaction is cracked between the broker. So commission is paid. Commission is paid by Ram to broker, by Sham to broker on this transaction value. On this transaction value. Okay, not okay. Okay. Now, Ram and Sham, after this, they become friends. Now, again, Ram is buying one more land from Sham. Will you involve broker in this? Now, Ram and Sham will directly deal. Will you pay interest to this fellow? No. So this is the value. This is so here in this particular transaction. In this particular transaction, the broker is getting commission out of this 1 crore. So you pay 1 crore plus 1 lakh commission. So 1 crore, 1 lakh is come interest. Come interest. Imagine brokerage is interest. So it is come interest. And here this transaction happening excluding interest. Both transactions are taking place separately. So here Ram is paying the amount to Sham without including the brokerage, without getting the person inside the deal. Similarly here, when Ram and Sham is cracking the transaction, they are cracking the transaction 97x interest without interest. Telling that interest will separately pay. Why? Because if you include the interest component in this becomes the transaction value. Broker will get the commission on that interest also. So some people, to save the commission on that interest component, what they say, between us, let's transact for X interest. So value will be less. Transaction interest separately will give. So the transaction that the broker is getting executed between Ram and Sham could be X interest or come interest. X interest means what? In this 97, interest is not there. Just because it is X interest, it doesn't mean that we are not paying interest. We will pay interest, but we will not pay it through broker. We'll pay it separately. When I say come interest means what? 97 come interest means what? In this 97, we have interest also. Or let's say 99 come interest. Come interest is 99. So we are paying this through broker. So for broker, what is the transaction value now? Income interest 99. On this, he will charge commission, brokerage. If it is X interest, he will charge on 97. So on 2 rupees, I'm reducing my commission. I'm saving my commission on 2. That is the motto of 2 rate coming into picture. Am I loud and clear? Just because the word X interest is there, it doesn't mean that we are not paying interest. We have to pay interest. Now the question is whether the interest is included in the transaction value or it is separate, is what we have to say. The fact of the matter is that on 30 September, Ram is going to get the interest for 6 months, whereas he has done the investment only for 1 month in that 6-month period. So he is eligible to earn the interest only for 1 month. Unfortunately, the company is paying the entire 6 months interest to Ram, because company cannot sit and decide in this period who was holding the debenture or bonds for how many months. I can't sit and calculate, because as a company I have a larger role to play. I can't deploy one resource to understand, oh, Sham, you held for 5 months, take 5 months interest. Or Ram, you held for 1 month, you take 1 month interest. I will not sit and do all this calculation, because it is not one person. There are thousands of people, lakhs of people who are buying and selling on day-to-day basis. It is not just Ram and Sham. Like that, Ram and Sham, 100 lakhs and thousands of people we have. Some people sell it within 1 month. Some people sell it within 2 months. Imagine the entire year. Lakhs of people, transaction thousands and lakhs of times. Can I sit and calculate in this entire year? First, Sham had for 5 months, then Ram had for 2 months, then somebody else had for 1 month, then somebody else for 3 months. Can I keep on paying the interest on a proportionate basis? Not possible. So company says that I will not take that headache. You guys decide out of the league. So company will company will help to transfer the debentures or bonds from one party to another party. The formality for transferring the company will help. But the dealing of prices, that you guys do it through the broker. Am I clear? So interest has to be paid. Interest has to be paid. Clear or not clear? Are you clear with the concept of X interest? X interest means the transaction value that the broker is cracking. The buyer and seller is agreeing on rate, no? In that rate, if interest is already included, we call it as come interest transaction value. But if the buyer and seller decides to deal with interest separately without broker, then the rate which the broker is helping you to crack, that is called as X interest. I will keep it very limited. Don't confuse too much. Just because it is excluding interest, does it mean that we are not paying interest? We will pay interest. X interest, come interest is just a term to represent whether in this transaction value, whether the interest is included or not included. Included means the brokerage has to be paid on the come interest value. According to broker, what was the money exchanged? If the value exchange is come interest, On that value, he wants the commission. You go to any land broker, ask, you want 1% commission? No. That 1% on what I should calculate? Ask him. He will tell what money the buyer paid to the seller. On that money, I want it. So if you are doing a come interest transaction, if you're paying 99 rupees, on the 99 rupees, he will want commission. But if you're paying 97 x interest, means the broker is helping you to crack the deal for 97 rupees, excluding interest, he will charge the commission on 97 only. On the 2 rupee, he will not charge commission. Now clear? Again, I'll repeat this point. Don't panic.
So what happens if we came to know that after a few years that they paid the
Doesn't matter, because broker also knows this. Broker cannot compel that, no, you have to pay interest through me only. If you want to pay it, you pay it. You have paid separately. Broker cannot say anything in this. So this is well understood in the market. Broker also know that it is at the choice of the buyer and seller to pay whether the come interest or X interest. You can't go and compel. In reality, the things are a little bit different, but let's not go that much deep. I'm discussing what is relevant conceptually from the examination viewpoint, what is there in textbook. In real life, things are a little bit more different. We're not going, because in that we have multiple scenarios. It is very complicated. So let's not go that into all that deep. Now,
Sir, I'm unable to understand X interest, sir.
let me complete the sum, then you'll understand. Compute the cost of investment as on 31st March 25. They want us to calculate the cost of investment. Now, please understand, between Ram and Sham, there's a transaction happening. Transaction of buying and selling bond. This particular bond is giving birth to two concepts. One, we have this concept of investment. Means the value that the person Ram is paying to Sham for buying the bond, that is called as investment. So here we have one component called as investment, second component called as interest. Both are, can I say, separate? Investment is asset. Investment is either income or expense. It could be either income or expense. So two components are there. Now first let me talk about X interest. This 97 rupees is X interest, excluding interest. Excluding interest means what? This is the pure purchase price of the bond. In this, interest is not included. If it is come interest, then what will value, sir? Interest, if you add it, either it could be 98 or 99 or 100. I'll tell you what is that value also. Now, I want to know what is the cost of investment. What is the cost of investment? So, calculation of cost of investment means what? At what value I should measure and record that investment as asset in my books of accounts. Please tell me. Purchase price of investment. Purchase price of investment. This should always be X interest. This should always be X interest. Why it is like that, I'll tell you. Purchase price of investment. How much? Sir, 500 bonds we're buying. Each bond, at what rate are you buying? You're buying at 97 rupees. Which means if I have to buy one bond, I have to pay Sham 97 rupees. This is purely the value of the bond. No interest. Interest separately I'll pay. This 97 is pure value of the bond. Which means if I'm going and buying today gold coin, one gold coin of 1 gram, the market rate is 10,000 rupees. That 10,000 rupees is called as purchase value of the gold. Like that, the value of the bond is how much? 97 rupees per bond. Into 500 bond, how much?
48,500.
This 97 rate is called as transaction value. Who has helped Ram and Sham to negotiate this value? Broker.
Broker.
Broker knows that this is the value that you are going to exchange the money for. Can I say on this value you will charge the brokerage? Now the brokerage that you're going to pay to the broker, should I treat that as revenue expenditure or should I capitalize with the investment? Capitalize with the
Capitalize.
Should I add it with the investment value or not? Capitalize means we have to add it. So add brokerage. Add brokerage how much? Sir, transaction value means the value that has been transacted between two parties through broker is called as transaction value into brokerage commission percentage. So it is 48,500 into 2%. How much? 978. 970. Okay. Then along with this, you're supposed to pay stamp duty. Stamp duty basically is the tax on the transaction. Like how when you buy a product, you pay GST. When any supply of the goods and services happens, you pay GST. Like that, here also we have stamp duty. Stamp duty is not GST. It is apart from GST. Stamp duty is the duty that has been levied by the local government, respective state government. So stamp duty is always calculated on the pure purchase price. Stamp duty is always calculated on the purchase price into the stamp duty percentage. So what is the purchase price? In our example, transaction value and purchase price both are same. The difference between them is interest. So here there is no come interest. So the transaction value and the purchase price both are same. Again, if you have doubt here, don't panic. I'm telling you, கண்ட ரத்த கண்ணீர் வர வரைக்கும் திருப்பி சொல்லிட்டே இருப்பேன். So don't panic. If something is not understood, it is okay. I am trying to connect the dots. So I've put a lot of dots here. I'm trying to connect it. Some things could have been missed now by you in this question. I'll cover it in the upcoming question. So don't panic. So what is the purchase price? Purchase price. The price that the buyer and seller has purely executed for the purchasing of that investment. That is what is purchase price. How much it is? 48,500 into 1%, 485 plus we have incurred 500 rupees more for executing this transaction. That also needs to be capitalized. Other charges, other expenses. My total investment value is how much? 50,455. This is called as cost of investment. In this, do you have any doubts? This is called as cost of investment, which I will record as the investment value in the books of accounts in the balance sheet in form of asset. So this is my asset value. This is my asset value. We say no, investment should be recorded at cost price or fair value, whichever is less. So cost price is what? This is the cost price. This is the cost price. Okay, not okay? Yes. Yes, sir. Now, if you give 48,500 to Sham, will Sham accept and give the bonds to you? No. Apart from this, he'll ask interest also. So that next, calculation of interest to be paid to Sham. Sir, why will we pay interest when we have not received the interest? We don't have Sham ka interest now. Why will I pay? On 30 September, 1 month later, you will get no, because on that day your name is there in the debenture holder list. So you will get the interest for 6 months. How will the company calculate interest? From the previous interest date to current interest date, how much is the gap? 6 months. Last interest paid on 31/3/24. Now we are going to pay on 39. So what is the gap? 6 months gap. 6 months ka interest, it is obvious that you will get it. In the 6 months interest, you are supposed to enjoy only 1 month interest. So how much you are supposed to pay? 5. That is what we are calculating. So what is that 5 month interest that we have to pay? Interest, my question to all of you, is calculated at face value or paid up value? Face value. Oh, like that. KVA Limited issued 10,000 bonds or 10,000 debenture at the rate of rupees 100 each, 50 paid up. Who are you? CA of KV Limited. You are the CA of KV Limited, or you are the director of the KV Limited. You are the director, not me. Promoter, I'll be, no problem. Touch your heart and tell me, how much money have you received from the general public? 10,000 into 50. 5 lakh you received. How much money have you enjoyed? 5 lakh. Are you trying to tell me that you will not pay the interest on 5 lakh? Rather, you will pay the interest on 10,000 into face value 100, which is 10 lakh? Future, when you form a company, no? When you issue bonds and debentures, I dare you pay at the paid up value. If I see paying you, paying interest at paid up value, I'll kill you. Because you said in my class, you'll pay at the nominal value. You paid nominal value. Means you also pay the interest on that 5 lakh you have not enjoyed. Will you pay interest? Will you pay interest on that money which you have not enjoyed? No. Always interest is paid on the paid up value, not the face value. There are three values to be understood. Face value, also called as nominal value. There's something called as paid up value. What is paid up value? This is the money that is being called for by the company to be paid. Then comes your purchase price or transaction value, which is 97, 98. All these three are different. In this question, when the paid up value is not given, we presume that the face value is equal to paid up value. Never in the question they give paid up value. They give only face value. So we assume that the face value is equal to paid up value. CA final people who completed so-called your inter examinations, I cross-check with them also what they are understanding. Inter clear, but still knowledge is not there. because they didn't learn from. Always understand interest is paid on the paid up value. In the absence of paid up value, we believe that face value is equal to paid up value. So in this question, I am calculating interest. I am calculating on 100, but the 100 is not face value. That is paid up value. Now, please tell me, how do I calculate the interest? Interest for 5 months. That is from April to August. Why are we calculating this 5 months interest? Why are we calculating this 5 months interest? Why are we calculating the 5 months interest? To pay to Sham. Because in this period, who was holding the investment? Sham. So who is the person eligible to get the return on investment? Sham. But actually, who is getting in the reality? Ram. So you have to calculate that amount and pay to Sham in advance. That time only he will transfer the debentures to me or bonds to me. Or else he will not sell the bonds and debentures to me. So what is the value? Sir, Sham was holding 500 bonds. Each at the paid up value 100. Paid up value 100. How much? 50,000. Donkey fellow. 97. He transacted it. He transacted 97. So which means, are you trying to tell that he sold at a loss of 3 rupees? Yes. In this question, yes. 100 rupee ka debenture he sold for 97. Why, sir? Why did he sell at loss? His problem. What is your problem? He wants money. He sold it. What for you? Donkey fellow. Now, 50,000 rupees is the investment value of whom? Sham. He has invested in the current year for how many months? 5 months. What is interest rate? 8 by 100. 50,000 to 8 by 100 will give the interest for the entire 12 months. We want for 5 months. 5 by 12. How much?
166.67.
So 1,667. Can I take it? Yes. This is the interest. This is the interest that you have to pay to Sham. Which means, sir, are you trying to tell me that I have to pay this much value, and this much value in total? Yes. So out of this 5,455, to Sham you'll pay 48,500. To broker you'll pay 970. To government you'll pay 485. To other person, lawyer will pay 500. So in total, for investment, how much is the outflow? 50,455. Am I going to segregate this entire amount in my balance sheet, in my journal entry? No. A13 says that don't tell how much is paid to this fellow. In total, for that investment acquiring, how much you paid? 50,455. And interest separately. So A13 says that segregate the payment into two parts. One is investment part, second is interest component part. Okay, not okay? Online people, okay, not okay?
Okay, sir.
Okay, sir.
Now, what is the journal entry on 1 September? When the transaction is getting executed between Ram and Sham, what is the journal entry in the books of Ram? Sir, we are buying the bonds. Bond for us, it is investment because we have the intention to earn interest from that investment. So it is my investment. So debit what comes in? Investment is asset. Asset is real account. Debit what comes in? 8% bond account debit. How much? Always at the cost of investment. 50,455. 50,455. Any problem? Apart from that, okay, this money you're paying. So can I say two bank? Two bank, how much? 50,455. Do you think that by paying this 50,455 to Sham, and more specific, you're paying only this much to Sham, will he transfer? Will he transfer? Will he transfer? Will he transfer the bond to you? No. One more thing you have to pay. Interest. Interest that you're paying is that money which will come back to you in future. Interest that you're paying now will come back to you in future. So anything that I pay now, which is coming back to me in future, is my asset. To create asset, debit. This is one way of justifying why interest should be debited. I prefer the second method. I feel interest is my expenditure because I'm going to get 6 months income. In that 5 months interest I'm paying. So income minus expense, net income for 1 month. So to debit interest, to debit expenses, what are we supposed to do? I mean, to create expenses, what are we supposed to do? Debit. So interest account debit. Interest account debit. If you want to treat this as expense, you treat expense. You see, this money I'm paying now because I'll get this money back in future on 30 September from the company. So anything I get back in future is asset. Anything you take it. But I prefer to take the second one, which is expense. Expense. Interest is my expense. Because this money I'm paying from my pocket. It is my expenditure. Of course, I'll recover in future. But this is my expenditure. Debit all expense and losses. So what is the interest component? 1,667. Now tell me, what is the total amount that you're paying? 52,122. This is the entry on 1 September. So guys, I'm going in the chronological order. I'm going in the order of the question. Dates are very, very important. Guys, Ram, will you record anything on 1/4/24? No. What is the next date? 1/9/24. On 1/9/24, I record entry. Any problem? No problem. Next transaction taking place on 30 September. 30 September, what is happening? You are receiving the interest from the company. So what is the journal entry for receiving the interest from the company? So on 30 September, I'm receiving the money from the company, bank account debit. And this money is coming to, it is your income. Credit all income and gain. So to interest. Calculation, please. Sir, 500 bonds be purchased at paid up value of 100. Don't put 97. People put 97 here. When I say paid up value, you don't think what is your paid up. Sometime your paid up will be 97. Ram is buying this at 97, sometime at 100, sometime at 110. So the value that is exchanged between two party, between the buyer and seller, that is never considered as paid up value. Paid up value means what? When the bond was issued, no? What is the money the company received? The company received one value in the beginning, no? That value is called as paid up value. So what is the paid up value of the company? Not given, sir. Face value is given. So I'm assuming that face value 100, no? The same 100 rupees is the paid up value. So always the debenture is paid on the paid up value. The value for which the company enjoyed, the money which company enjoyed, on that only they'll pay interest. So how much is the money that the company enjoyed from you? 50,000 into 8/100. This will give you interest for 12 months, but we want for 6 months. Into 6/12. How much?
2000.
2,000 rupees. Any difficulty in this? Online people, any difficulty in this?
No, sir.
No, sir.
After this date, the next transaction is taking place on which date, people? In between, did Ram buy any other debentures or bonds? No. Did he sell anything? No. Directly next is 31/3/25. Now, from 30 September to 31/3, who was the holder? Ram was holder. This interest will belong to Ram, or Ram has to pay this to anybody else? No, this is Ram's ka investment. Ram will enjoy this money. So on 30 September, please tell me what is the interest? 31st March, bank account debit. On 31st March, bank account debit to interest. Same calculation, 500 into 100, 50,000 into 8/100. And now it is for remaining 6 months, which is 2,000, 2,000. So in the first 6 months, Ram enjoyed his money for 1 month. In second 6 months, he enjoyed for full 6 months. So he has to enjoy interest for 7 months. Now in ledger, if you see, ultimately the closing balance of the interest will be the interest of 7 months. Can we do it? Okay. Now observe, don't do anything, just observe. Generally, here you're supposed to open two ledger. One is investment ledger, second is interest ledger. But here ICA suggests that please combine both the ledger and make one single ledger to save time. So you remember we did subsidiary book in CA Foundation, where we had 3-column cash book. One column was for cash, one column for back, one column for discount. Same way, here we're doing 3-column entry. So what is third column for? Third column is for the face value. So I'll do the format, just observe it, then you draw the format. Just observe. We'll have 3 columns on either side. Date, particulars, face value, interest, amount. Date, particulars, face value, interest, amount. Now, high chances for people who have the habit of writing the letters a little bit big. To fit this ledger in one page is not going to be easy. So when I did this in my exam, I never behaved like you people conjuice. I paid money for what? Exam paper. So what I used to do is, this debit side, I used to record at the left hand side of the sheet. And this I used to take in the right hand side. Because it is coming, the book, that answer script is coming from a booklet. It is booklet. So when I open the sheet, no, both are visible. So I used to record this in the left hand side of the page. This on the right hand side. because I used to write it very broad, big letters. So I can't write kuti 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 kuti. I feel it's very congested. Now this is a different case. I've learned now. Back in those days, I'm talking. You've given paisa to ICA. Booklet, 36 pages plus additional sheets available to you. Completely utilize your money. Paisa vasool always. Paisa vasool performance. Now, same thing you will do now. You'll take a fresh page. Left hand side, how many columns? 1, 2, 3, 4, 5 columns. Right hand side, 5 columns. Do it fast. Sir, this is our paisa. No, sir. What for me? Full paisa vasool class I want to make. Do it. If I find any stingy fellow, what is she asking? Aprina? I'll break you. Now, first, finish the format. Hello. Shh. Sir, ledger without heading. Not good, sir. Okay. 8% bond in X Limited. Oh, like this, you're right. Yes. Sir, if X Limited has got one more bond, 9% bond, will I put this in this ledger or separate ledger? Separate ledger. So for each class of investment, one separate ledger. Very, very important point. Manisha, what did I say now? Each point, what will you give me? Each के बाद each क्या pitch हो गया तेरा? अड्डी but yeah, this is what happens when you talk. Vidhi, you tell me now. बस हो गया ना, लग गया ना तेरा? पता बेटा. For each, बस each के बाद कुछ नहीं आ रहा है. Leach छोड़ दूंगा. Each. I said for each class of investment, 8% bond, 9% bond, 10% debenture. For each class of investment, separate ledger. Don't be कंजूस का बाप, recording everything in one ledger. Now, listen to me very carefully. Shh. Face value column is just to give us an idea that the investment that you've done, no, what is the face value? Because it helps us to calculate the interest very easily. Interest column is there, no? Interest is coming on debit side. This interest will represent expense, debit all expense and losses. So the interest column that is coming on debit side represents interest expenditure, that interest that you're paying to Shyam. And the interest that is representing or coming on the credit side represents your income. Create all income and gain. So one is expense column, one is income column. In general, expense interest is separate ledger, income interest is separate ledger. This also we're combining here because we want net interest. Imagine, no. Shh. Ram is getting interest on 30 September for 6 months. Ram is getting interest on 31st March for next 6 months. So he's getting total interest for 12 months. In that, I have to give interest of 5 months to Shyam. So that you're left with 7 months interest. So this netting off should become easy. For that, the interest ledger is also combined. Interest ledger combining, understandable, sir. Why are they combining interest with the investment? Imagine, no. Date column 2 times. Particulars column 2 times. To save time, I said that you combine the investment and interest. So this amount column is there, no? Amount column is investment column. Amount column is investment column. So buying of the investment increases the investment. To increase investment, asset debit. So buying of the investment will come here, the buy value. Selling of the investment will come at credit side. Okay or not okay? Not okay? Not okay? Open your mouth. Okay. Okay. How many journal entries have we passed so far? 3 journal entries. Can we start posting it? Yes. Okay. First entry is 8% bond account debit, interest account debit to bank. Simple entry, compound entry. So 11th standard question. If you ask now, how will I answer? We are Gajini people, say we forgot everything. Well, simple entry this is. Compound entry. What is compound entry? When you have more than one in debit or more than one account in credit, or we have more than one in debit and more than one in credit. That is called as compound journal entry. Okay. How will you do the posting? How will you do the posting? Sir, 8% bond is investment account, interest is interest account. These both are combined in one single ledger. So we have opened which account? Investment account and interest account. So posting is done in this account. So now record 50,455 in the bond account. In the description, who's opposite party? To bank. On what date? 1924. To bank. What is the purchase value of the investment? 50,455. 50,455. Any problem? Plus you have to pay interest to the party Sham. Interest to bank. In interest column, to bank 1667. Imagine had you written two separate ledger, to bank one more time you write. Here you did just wrote it just once, saving time. That is the purpose of combining the ledger. He's clapping not for me, Dad. This is for ICI. You have to clap for ICI. Oh, that clap was for ICI. I thought he's clapping for me. Now, face value column. What will come? No. You write the entire face value of the investment. 500 multiplied by 100. 50,000 is the face value. Oh. Write it down. Tell, very tough it is. This chapter is very, very tough, sir. I'll leave in choice and come. Tell. Long if okay, sure. Shoo. Don't talk with. Now, 30 September, what entry? Bank to interest. In interest, by bank. What date? 30 September 24. By bank. Face value column, blank. Amount column, blank. Interest only will record. What is interest? 2000. This is interest from what date to what date? From what month to what month? April, May, June, July, August, September. 6 months interest. Who got? We got. So 2000 you got. In that, how much already you paid? 1667. So net, how much you got? Interest only for 1 month. How much? 333. Okay. Yeah, the what I said received? I said 2000 received, 1667 paid. Net how much? 333 is in my pocket. Okay. Now, after this, next transaction taking place on 31st March. Bank to interest. In interest, by bank. Tell very tough. 31/3/25 by bank. How much? 2000. 8% bond in oh. You want Sham ka name to come here, 8% bond in X Limited. So this investment I've done in X Limited, not in Sham. Sham ka name you want? In the books of Ram only we're doing. Oh, that also you want me to write, Amul baby. Now, okay. Relax. She's fine now. Now come back. Sure. Now what are we supposed to do? Without forgetting, at the end of the year, you have to check the valuation. In this question, they have not mentioned that this is long term or short term. I told you whenever the question is silent about the holding period of the investment, we always assume the holding period is short term. So I have to compare the cost price with the fair value. In this question, I did not give you fair value. Fair value, I'll discuss in separate question. I told you if I bring everything in one question, what will happen? Utter confusion and chaos. So we'll all deal challenges in different questions. So forget fair value as of now. In this question, not done. When it comes, we'll discuss. So then what are we supposed to do now, sir? Balance ledger, game over. Let's go to next question. Wrong, fellas. Now, first investment. Balance investment ledger. 31/3/25. By balance brought down. What is the face value? Sorry, carried on. Always finding fault in sir. 50,000 is carried on value. Any problem? Okay. Amount same 50455. Interest will not come here. Interest will come on the opposite side. I hope all of you know the balancing. Anybody who does not know the balancing? Solle. 2,000 plus 2,000. 4,000 rupees income received. In that, how much is paid? 1667. So what is the balance in your hand? 2333. So on 31, 3, 25, 2, 2, 2, balance will not come. P and L will come because this is nominal account. You have to transfer to the P and L. So one more entry will come, sir. Oh, we didn't leave space, sir. I have space. 31, 3, 25. I have space. You have space? Lucky fellow. Tell me. Closing entry. You have full page, huh? Rich fellow. One page is left. Now tell. Interest, guys. Interest, we have credit balance. To close, we have to give debit. So interest account debit. 2 P and L. 233. 233. So in the P&L, buy interest will come on the credit side, income side, or this will go to your other income in the statement of P&L if you're preparing for the companies. So in the interest, 2 P&L will come 233. Now let's do a calculation to cross check whether our calculation is right or wrong. 500 into 10, no, not 10, 100, 50,000. 50,000 rupees you invested, means Ram invested for how many months? 7 months. So into 8% into 7 by 12. Are you getting this? Please confirm. Hence proved. Any problem here? What happened, Manisha? Okay. I am not done in this question, ma. After this question, break will do. For every question, I've done a diagram. The line what I've drawn here is nothing but the holding done by the other party, for which you have to pay the interest. Which means the one which is not highlighted is the holding done by the current investor. Computation of purchase cost. Working note separately done for you. Why? Because I know how will you do in a notebook. Kirka Murka you will do. Later you will not have that energy, enthusiasm, motivation to study. So I'm going to give this printout also. Look at my large heart. Look at the working note. Beautifully I've done. Computation of interest to be paid to Sham. Oh. Then computation of interest to be received by Ram from the company directly on 30 September. On 30 September, so much he'll receive. So much paid. So much is interest of September. Like that, everything has been done. Here, I've done the investment ledger only till 30 September. In class, I did extra up to 31st March. Any problem? No problem. You want me to update here? I will update. No problem. You want me to do extra work? I'll do it. No problem. Example 6. You want break? But why? We started class at 10:45. It is 12:15. You only worked hard for 1 hour. 1.5 hours. Okay. Big deal. That's all. No. Labor, when he starts his working for construction of the house, he starts at 6 o'clock in the morning. He takes tea break, breakfast break at 11 o'clock. So much hard work. You're doing only mental work, no? Physically strong people do physical work. Mental people do mental work. To strengthen their mental. You just did the work for 1.5 hours. This proves that you're mental people. Mental people ask break for every 1.5 hours. Strong people say no break. Say no to break. Technically, I should be asking break. Tell me why. My throat is spinning. Look at my motivation. Look at my energy. Look at my interest, enthusiasm. I don't want. One question, then break. This question also takes interest. Break, then we'll go for common interest. Calculation of cost of investment with X interest concept when interest date and book closing date are not same. Oh. Build Purinjano. In a different dream. Interest date and book closing date are not same. So here something new is going to come here, which is not in the previous question. Seri, I'll give you 5 minutes break. 12:20, I want everybody to be back on the place. If not, I'll start by 12:20 sharp. Thank you so much. Yes, people. Welcome back from break. So let's continue. Guys, example 6. In this question, we are going to learn how to calculate the cost of investment Purvi, X interest. So this is something which we already learned. This part we've already learned in the example 5. Here, the additional topic that we're going to learn is the concept of accrued interest. When the interest dates and the book closing date are not same. So same example, I've just tweaked the interest dates. So by virtue of that, a new concept is going to blossom. Now, blossom, yes. Bloom, blossom, whatever. Huh? Thank you so much. Maska ho gaya? Very good. Now, Ram purchased 500, 8% bond of 100 each at 97 each. X interest on 1 September 24 of X limited from Sham. I've maintained the same question so that there's no harassment of processing the question every single time. He paid brokerage of 2% and stamp duty 1% on the transaction value and other expenses 500. Same. Interest is paid half yearly on 30 June and 31st December. This has changed. Previous question, the interest date were 30 September, 31st March, 31st March. So interest rate was happening to be at the end of the year. That is, second half of the interest was happening on the end of the year. Now here, both the interest date are not on the end of the year, somewhere in the middle of the year. Compute the cost of investment as on 31st March 25. Interest dates are changed. Now observe this very carefully. Previous year 23-24. Current year 24-25. What is the beginning of the current year? 1-4-24. Ends on 31-3-25. Interest bearing debts. Tell me. 30 June. Interest date and 31-12. Again, interest dates. Likewise, please tell me the interest date for the previous year. Same. 30 June. And 31-12. Okay. Current year, Ram is buying this bond on which date? Date of purchase. 1st September 24. Somewhere here. Color is fine? Not fine? Not fine? No. No? Not matching. Oh, you want complementing colors. Oh, like that. Hey, pongada day. Dirty fellow sitting on the buffalo. No? Okay, 1 September. Ayyo, Rama. What is this drama? Now, what is happening on this date? You tell me first that. 1-9. Purchased 8% bond. How many bonds? At 97. X interest or cum interest? X interest. My question to all of you: what is the meaning of X interest? Wow. Excluding interest. Wow, this is what I'm expecting. No, X interest means this is the value that Ram will pay to Sham without interest. And this value, who has cracked it? Broker has cracked it. So broker has dealt an X interest price. Does this mean that Ram will not pay the interest to Sham? He has to pay. So which means apart from this 97, he has to pay additionally interest. Okay, not okay. Brokerage, I will calculate. I'll calculate on that value which the broker is finalized. Broker is finalized what value? 97 X interest. On that, I'll pay the commission, brokerage, any problem? No problem. My question to all of you: company is paying the interest on 30 June and 31st December. To which people? To those people whose name are appearing on the register of debenture holder. That is debenture holder register. From this period to this period, who was holding the debenture or bond? Sham was the holder. Sham was the holder. On 30 June, who was the holder whose name was appearing in the register? Sham. Which means on 30 June, whatever interest is paid, Sham received. Yes or no? So Sham received for this period, 1 April 24 to 30 June, Sham received interest from company. Yes or no? After 30 June, that is on 1st September, who took over that bond? Ram purchased the bonds. So which means on 1 September, the name of Sham will get removed from the register, and whose name will appear now? Ram. Now, from this period to this period, who was holding the debenture? 30 June to 1 September, who was holding? So typically 30 June means 1 July, August. 31st August means 1 September. For this 2 months period, who was holding the bond? Sham was holding the bond. So this 2 months interest, technically, who should get? Sham should get. But at the end, who will get it? Ram will get it, because as on 31 December, who is having the debentures in hand? Ram. So Ram is holding the debenture from this period to this period. Since he is holding as on 31/12, technically company will pay the interest to him. How many months interest? 1 September, October, November, December. He will get 4 months interest plus 2 months interest. Total he will get 6 months interest. In that he has to give 2 months interest to Sham. So that technically earns 4 month interest. Why 4 month interest? Because he has invested his money only for 4 months. No? Company has enjoyed Ram ka paisa for how many months? Ram's money. 4 months. September, October, November, December. For 4 months they have enjoyed the money. So when I have invested money for 4 months, I should expect the return for 4 months. But I am actually getting return for 6 months. Because as on 31/12, I am the person whose name is mentioned in the register of debenture holder or bond holder. So I will get full 6 months interest. From that, if I pay 2 months interest to Sham, remaining interest is with me for 4 months. Okay or not okay? Clear? Now, from this period to this period, who is holding the bond? Ram is holding the bond. Is interest date falling on 31st March? No. So interest will next come when? Next year, 30 June. So next year, 30 June, the interest will come. Will you record the interest entry on 30 June, or should you record the entry on 31st March? Sir, we are following accrual basis of accounting. Accrual concept says that record income when it is earned. You have invested the money in the company, and from this period to this period, you have earned an interest for 3 months. So these 3 months interest you have to accrue and record it. So what is accrual entry? Accrued interest to interest. Accrued interest to interest. Where did you study this concept? 3 places. 11th, 12th, CA foundation. With concept. Not like how you learned in 11th standard school. Accrued interest means what? Add. Outstanding salary, add. Prepaid, blindly minus. No. With concept, why add, why minus, everything has been discussed. What is the meaning of interest accrued also be discussed. We discussed this again in Inter, where in AS9. How the interest is accrued in AS9, that also be discussed. So are you clear with the entry? So here, the pink line that I've drawn, no, the pink one, or purple, whatever is visible on screen, that is what is the additional concept here. People miss to record accrued interest entry. They do everything perfect. X interest, cum interest, brokerage, stamp duty, everything they'll calculate properly. One entry they'll forget to write it. Accrued interest. Tell me, this problem never came in previous question. Why? Because in the previous question, there's no interest accrued. In the year, whatever interest was accrued, everything was paid. Come back to this date. From this date to this date, whatever interest was accrued was paid on 30 September. From this date to this date, whatever interest was accrued was paid on this date. So in this question, previous question, whatever interest got accrued in that year, everything was paid itself in that year. Nothing was receivable. In this question, 3 months interest is getting accrued. January, February, March, but not received. So interest accrued, but not received. Interest accrued, but not received. Okay, not okay.
Okay, so,
Online people, okay, not okay.
so can you explain that?
Okay, so
What is the problem in that?
It's
So we are paying the interest before itself.
Who's paying the interest before? Accrued interest. What is accrued interest? Sorry, simple. You put fixed deposit. You put a fixed deposit. When on 1 April. Yes, I'll just explain again the concept of accrued interest. 1/4/25, you put fixed deposit for 5 years. Bank says, I will pay you interest along with principal at the end of the 5 years. So when is the 5-year ending? 25, 26, 26, 27, 27, 28, 28, 29, 29, 30. So 31st March 2030, you'll get principal plus interest. Are we following cash basis of accounting or accrual basis? Accrual basis. Record income when it is earned. From this period to this period in the first year, don't you think your interest is accrued? You invested 1 lakh rupees at the rate of 10%. So what is the interest? 10,000 rupees. So accrual concept says that as on 31st March 26, you have to pass an entry called as accrued interest account debit to interest income 10,000, 10,000. 10,000 my income for current year. Because for this, I gave my service. Guys, we are giving service to the banker. When I provide 1 lakh rupees to banker, no, I'm providing my financial assistance to the banker. And after 1 year, I am eligible to earn my income. We record accrued interest on the time proportionate basis. So therefore, I record my income. And since this money is not received, I'm creating one asset. Why? What is asset? Anything that I expect to receive in future is asset. Anything that I expect to receive in future is asset. So after 5 years, I'm expecting this 10,000 to come to my bank account. So this is called as entry for accrued interest. This entry is what I'm now passing for 3-month period from 1 January to 31/3. Why? Because up to 31/12, whatever interest accrued entry you pass, was it money received? So April, May, June, July, August, September, October, November, December. For 9 months, interest accrued, money received. For 3 months, Jan, Feb, March, interest accrued, money not received. So that entry is what additionally we're going to learn in this particular concept. Now clear? Okay. What is the requirement of the question? Calculate the value of the cost of investment. Calculate the interest to be paid to the party sham. Journal ledger. Which ledger? Combined ledger. Any problem? No problem. Let's do it. First, working note. Calculation of cost of investment. Calculation of cost of investment. Purchase price or purchase value of investment. How many bonds are you buying? 500. What is the price that you paid for buying the bond? I'm telling, when I say price means I want always excluding interest. In this question, we're doing X interest concept. Means I want to know what is the value that the broker has finalized between you and the party. You and the party. How much? 97 into 97. Is this come interest or X interest? X interest. Had this been come interest, I'll minus interest. Why do minus interest? I'm discussing in X class. So now, what is the value that I paid for buying the bond? 48,500. This I have to make the payment to the party shop. Now, apart from this, the broker has helped us to transact this bond. So we have to pay him commission. That brokerage what you pay is not a revenue expenditure. It is a capital expenditure. Any expenses incurred directly in relation to acquiring of the investment should be capitalized to the investment account. Who is saying this? AS 13. So add brokerage. Brokerage will always be paid on the transaction value. What is the transaction value? The value which he has negotiated between both the parties. The final value which is getting settled between the party. No, on that value will always charge the commission. So what is the settled value here? 97 per bond. So 48,500 into 2%. How much? 970. Apart from that, you have to pay to the local government stamp duty. Stamp duty or stamp taxes. Stamp duty and stamp taxes always will be excluding interest. On the interest, stamp duty you will never pay. You will pay only on the pure purchase value of the investment. If I'm buying land, on the land value, only I'll pay the stamp duty. I will not pay on the other values. I'll pay only on the land value. So what is a pure bond purchasing value? 48,500. Because I paid 97 to buy one bond. So how much is the pure bond purchase value? 48,500. Always in the X interest question, both of these amount is going to be same. Whenever you get a question of X interest, the brokerage and the stamp duty is calculated on the same value. If it is come interest, the value will change. How it will change, why it will change, I'll be discussing in next class. So 48,500 into 1%, how much? 485. So this money you pay to broker, this money you pay to the government. In total, how much money is going out of your bank account? How much? Other expenses there? Okay. Add other expenses. 500. This you will pay to that party to whom you are making the payment. I mean, who is incurring the expenses? 50,000? 955 or 455?
455.
Same, no? Okay. Now, this is called as cost of investment. Now, next is working note number 1. Working note number 2. Calculation of interest to be paid. My question to all of you, on 30 June, who will get interest? Shyam is getting interest because he is the holder of the bond on that date. So whatever interest is being paid from 1 April 24 to 30 June 24, who has received it? Shyam has received it. So will you have any problem in paying this interest to Shyam? Will you pay this interest to Shyam? No, Shyam already received it. So I will not do any calculation of the interest from 1 April to 30 June because this interest is already received by Shyam. I will not receive this interest. I will not receive this interest. After 30 June, that is on 1 September, Ram purchased. After that, on 31 December, whose name is getting reflected in the 31st December register? Ram. So Ram will get the interest on 31/12. From what date to what date? Always interest is calculated from one interest date to another interest date. So previous interest was paid on 30 June. From that date to this date, 6 months interest will be paid by company to Ram. So Ram will get 6 months ka interest, but actually he is eligible to earn how much income? Only 4 months. So 2 months ka interest has to pay. So 2 months ka interest means which month? July, August. Because up to June he has got it. April, May, June he has got it. April, May, June, Shyam invested. Shyam got the interest. July, August, Shyam invested the money, but this 2 months interest who got? Ram got. So July and August 2 months interest, who has to pay to whom? Ram has to pay to Shyam. Interest from July to August. Guys, understand, don't by heart. Because the dates will continuously change in every question. There's so many complications involved in this. So if you don't understand that, why this has been done, if you by heart it, gone. What we're doing is Amul baby questions. This will not come in exam. Complicated version of this only will come in exam. Interest from July to August. Interest is calculated on the paid up value. Paid up value. Always on the paid up value. Here the paid up value is not given. So you assume to be calculated at face value. So how many bonds? 500 into paid up value 100. How much? 50,000. 50,000 multiplied by 8%. This will give you interest for 12 months. We want for 6 months. June to December. How many months? 6 months. Oh, sorry, 2 months. Sorry. Here we are calculating for 2 months. Sorry. Into 2 by 12. You want for July and August. How much? 667 is the interest that we have to pay. Any problem? What is the interest from July to December? 500 into 100, which is 50,000 into 8% into 6 by 12. How much it is? 2,000. So from this 2,000, if I minus 667, what is the net interest we earn it? 1,333, which is the interest for September, October, November, December. Interest from September to December. From 6 months, if I minus 2 months, I'll get 4 months interest. can do this calculation, you'll get 1,333. Anybody's got any difficulty understanding this? Online people, anybody's got any difficulty understanding this?
No, sir.
Okay. Working note number 3. Calculation of accrued interest. So accrued interest will come into picture when the interest date and the year ending date are not same. What is year ending date? 31st March. What is interest date? 30 June, 31st December. Both are not same. Hence accrued interest will come. So we have to now calculate the interest from 31/12 to 31/3. This period already calculated. So this period interest accrued and received. This period interest accrued but not received. When will I receive? Next interest date on 30 June of next year. That time I'll receive. So we have to pass interest accrued entry. So interest from Jan to March. Interest from Jan to March. 50,000 into 8 by 100 into 3 by 12. How much? 1,000. Any problem? Online people, any problem?
No, sir.
Now, my question to all of you. We have so many dates here. Which date, what transaction Ram should record? Sir, Ram should record the entry on 1/4/24, sir. What will he record? Nothing. Nothing on 30 June. 1/9/24 purchase entry. 31/12 interest entry. 31/3/25 accrued interest entry and closing entries. Now clear? So 1/9/19. What is the journal entry for buying? We are buying bonds, investment. For us, it is asset. Asset is what balance? Debit balance. To create asset, debit. 8% bond account, debit. This is coming from working note number 1. Working note 1 is done so that you can calculate the value of the investment easily. I need to capture the investment value. No, that is coming from working note number 1. 50,455. 50,455. This payment has to be done to multiple people. One part will go to Sham, one part will go to broker, one will go to government, one will go to third party. Total we are paying. By paying this, will you get this debenture from Sham?
No.
Sham will ask one more additional thing. He'll ask pay me interest also for the month of July, August. Because up to June he got it. April, May, June he got it. July, August, he's eligible to get interest, but who's getting on behalf of him? Ram. So that he wants from Ram. So interest we are going to pay. For us it is expenditure. Debit all expense and losses. So interest account debit. How much? 667. Will you remember always record the 2 entries at the time of purchase? We're paying 2 amount, 2 component. One is the investment component, second is the interest component. 2 amount will pay. Whether it is X interest, whether it is cum interest, you have to pay 2 amount. X interest and cum interest is only for the purpose of calculating the commission and stamp duty. I'm telling you. Always you'll pay 2 amount. You will get a better clarity of this when I do cum interest questions. I'm telling you, give me 2 classes today and tomorrow. All your concepts, pakka will be clarified. I'm buying investment by making the payment through my bank account. Debit what comes in, credit what goes out. Debit this is credit the given. So banker is giving the money on your behalf. Credit the given. How much?
51,122.
51,122. Simple. Next event is happening on 30 September 24. You are receiving interest. So not 30 September. 31st December, sorry. 31st December. That's why timeline is very important. If you get confused with the dates, no, come back and revisit the timeline and get to know what date is coming after the other one. So after 1 September, the next date is 31/12. On 31/12, what is happening, people? Sir, we will receive interest. We will receive interest in our bank account. Debit what comes in, debit the receiver. Bank account debit. How much money will come? Refer to working note number 2. July to December, you will get 6 months ka interest, 2,000 rupees. 2,000 rupees full 6 months interest. July, August, September, October, November, December. 6 months you will get. Bank account debit, and this is your income. So 2 interest. 2,000, 2,000. That's a different story. 2,000 you have credited positive year, and 6,667 you have debited minus here. So what is the net amount? Net income. 1,333, which is basically a 4 months interest. Are we supposed to sit and brainstorm? Not required. When you balance the ledger, automatically a difference will come. after 31/12/24, next event is taking place on 31st March 25. 31st March 25, we have to pass the entry for accrued interest because all the adjustment entries will happen on 31st March. All the adjustment entries should be dated on 31st March. Please understand, 31st March, we will not sit and pass the entry. 1 April, 2nd April, 5th April, 10th April, 20 April, 1 May, 2 May, 10 May, which means next financial year. Somewhere here, you will sit and pass the entry. But when you pass the entry date will be 31st March. That's what we studied in 11th standard in CA Foundation. The adjustment entries. The adjustment entries you pass as on 31/3. All the adjustment entries are passed on 31/3. But technically, you pass all the entry in the next financial year. Depending on how big your company is, depending on how big your accounting team is, you will take additionally couple of days, weeks, months to finalize the accounts. Am I loud and clear? This point from 11th I'm discussing. After this, what will happen? Sir, we have to accrued didn't pass. Okay, 31/3/25. Accrued interest account debit to interest income. Again 1,000 coming from working note number 3. Working note number 3. Sir, are we supposed to give reference to working note? Yes. Now closing entry 31/3/25. Whatever is there in the net interest will transfer to P&L account. So don't sit and do the calculation. Anyways, you're going to prepare ledger. Whatever the balance is coming in the interest ledger, that is the closing entry. That is the amount for which you have to pass the closing entry. So leave the space for that. So entry is going to be interest account debit to P&L. Interest account debit to P&L. Amount I'll take it from the ledger. How many ledgers will you prepare? One ledger, but how many columns? Each side 3 columns. Let's do it. Can you please tell me heading of this ledger? Investment in 8% bond or 8% bond in X limited account. Even you can write the word investment in 8% bond in X limited. It will become a little bit too big only, but this also we can do it. First column, date, particulars, face value, interest, expense or income. Debit side is always expense. Debit all expense and losses. And then amount. Date, particulars, face value, interest, amount. Today is what? Thursday, no? Okay. First entry, 1 September. Investment account, 2 bank. Interest account, 2 bank. So 2 bank on 1 September 25. Is the gate open or closed? Open. Close it. No? 2 bank. How much in investment column? 50455. How much is in interest column? 660. Face value. Face value. Number of scripts multiplied by face value. How much? 50,000. Next entry on 31/12/24. Bank to interest. In interest, by bank. Income. Credit all income and gains. Record on the income side. Credit side. 31/12/24. It's not 25, not 24. By bank. Face value nil. Interest is 2,000. Investment is nil. Now, next entry is on 31/3/25. Listen to me very carefully. You will say that, sir, interest column by accrued interest will record. But what I say does is, they don't record this as a separate entry. In the balancing figure is there interest column. That is the balance carried on in the investment column. There they record accrued interest, 1,000. I'll show that what they're doing later. I will do what normally we do. How ICA presents it, I'll show you in the question when we do ICA related questions. As of now, we'll go in a flow. I don't want to deviate from the concept. So on 31, 12, 24, by accrued interest. By accrued interest.
31,325.
Oh, 31.3, sorry. 31.325. 31.325. By accrued interest, how much it is? 1,000. Then what happens? Balance directly. Which one do you have to balance first? Investment, okay. 31,325 by balance carried on. Face value 50,000 on debit, nothing in credit. 50,000 only here. And for investment is same. Debit is 50455, nothing in credit. So same value will come. Interest 31,325 to P&L. You've earned how much? 2,000 plus 1,000. How much? 3,000 you earned. This does not entirely belongs to you. Out of 3,000, you have to pay 667 to whom? Sham. So what is the balance amount that is belonging to you? Eh? You guys must decide and tell me.
1,333.
Kanna, 2 plus 1 is 3. 3 minus 667 is 2,333. So 2,333. 2,333 is basically the amount that belongs to you, which will be transferred to P&L account. So coming back here, interest to P&L should be how much? 2,333. So basically, this is the interest income earned from the period. When did you buy the asset? 1 September. September, October, November, December, Jan, Feb, March. 7 months interest. 7 months interest is 2,333. 50,000 into 8% into 7 by 12. Is it 2,333? Ledger perfectly tallied? Very good. Now, what should we do? Go home, huh? Oh, like that. Ledger perfectly matching. Accrued interest matching. Perfect. Everything I've done, guys. Everything I've done. I tried my level best to present the answer in a way that even if you self-study, you'll get the answer. Self-study means after my class, you self-study. That is self-study. Seventh example is supposed to be the concept of come interest. I need at least 45 minutes to 1 hour to explain this concept. So technically, we'll be doing in the tomorrow's class. 7 and 8, I can do it tomorrow. We'll wind up. So happy, smiling faces, no? Oh, come interest. Where there is a way, there is a. Hey, what is it? Where there is a bill? Sorry, no. Sorry, okay. Guys, we'll complete this concept. I need somebody to encourage me. I got one encouragement. நீ என்ன clap அடிக்கிற? Encouragement, oh, like that. See, why there's a logic of doing this is because that X and come both concepts will be done today. So that flow will set for all of you. One question only. Half an hour. I think half an hour also should be fine. Now, example 7, calculation. For those people who watch this as future recording class, they'll be shocked. Mudike start pantare. Like how you're shocked now. Calculation of cost of investment with come interest concept. Come interest concept. Now, same question. Sure. Ram purchased 1000 quantities of 9% bond of 100 each at 102 each come interest, which means broker is shrewd fellow. He doesn't want to leave the commission on interest. He's like, no, you don't pay interest separately. You pay interest through me so that he can get the commission on that. That is the only difference. Come interest, ex interest concept is only from the point of view of the brokerage calculation. Whether this value is at come interest or ex interest, will Ram not pay interest? Just because it is ex interest, will Ram not pay interest? Ex interest means what? Excluding interest. So Ram will not pay interest. No. Whether it is ex interest, whether it is come interest, he has to pay interest because that belongs to Sham. So what is ex and come interest? So the transaction value, the document value, the security value, whether it is including interest or excluding interest. Based on that, the brokerage will be decided. That is the only difference. Ram purchased 1000 9% bond of 100 each at 102 come interest, which means whatever is the interest component, for that period, it is included in this 102. So this 102 is purchase value of the bond plus the interest component. So how do we get the come interest value? Very simple. Tell me, the 667 is interest is there, no? This is for what period? For 2 months. This 2 months interest on how much bond? 500. 667 is for 500 bonds. And for one bond, how much? Cross multiply. Tell me.
1.34.
1.34. 1.34. 1.33. Okay, 1.3. 1.33. So now, what is the ex interest price? 97. With that, if I add interest component 1.33, what is come interest value? 98.33. Which means ex interest means what? The broker has done the dealing at this rate. Come interest means broker has done this dealing at this rate. Which means interest component per security is been factored inside this value. Let it be. What for us? Any problem? But yes, there's a problem. 98.33 is come interest. If you take this, multiply with 500, you will get one investment value, cost of investment, that be including interest. Can the investment value be including interest? No, because interest separately we have to account. So what are we supposed to do? If you get a question, come interest, you have to minus interest and record interest separately. So now what do you think is the formula to calculate the cost of investment? Come interest value. From that minus interest, I'll get X interest value. With that add brokerage, stamp duty, other expenses, I'll get cost of investment. Why am I minusing X interest? Because interest separately we have to account in the interest ledger, not in the investment ledger. Please tell me, you calculated the working here. 50445. This is the value that went to investment account as investment, as asset. Can I, just because they're telling this is income interest, let's say this is 97, come interest. Can I record this at come interest? No, because interest separately I have recorded in separate ledger. If you do not minus interest, what will happen? In this interest will get included. Can I include interest in my investment? AS 13 does not allow. So if you get a purchase value including interest, while calculating the cost of investment, remember to minus it because interest separately we record. Am I clear? So two things you have to remember. When you get a come interest value, minus the interest component in deriving the cost of investment. Second, brokerage, you should calculate on the transaction value. So in come interest, what is the value that the broker, cracked? 102 in our example. This example, what I'm taking, 102 is the value, which has got the purchase value plus interest value. So he will say, since I negotiated two transactions together, I will charge commission on 102. Because this is the deal that he has cracked. He has cracked the deal come interest. So he does not understand, should I calculate the interest on should I calculate the commission or interest or not? According to him, whatever money you have transacted through me, on that I want commission. Am I loud and clear? Any difficulty? No difficulty. So this we purchased on 1 October 24 of X Limited from Sham. He paid, who paid? Ram paid brokerage 2% and stamp duty 0.5% on transaction value. Interest is paid half yearly on 30 June and 31st December. Compute the cost of investment on 31st December. So what is the financial year? Jan to December. Jan to December. Interest date 31st December. Year ending 31st December. Both are same. Accrued interest will come or not come? Not come. This is the power of conceptual understanding. Accrued interest will come into picture when the year ending interest date both are different, not same. Accrued interest will come. Here, year ending 31st December. Interest date also 31st December. Both are same. So during the year, whatever interest is accrued, everything is received. So interest accrued but not received concept is not even there in this question. Okay, not okay?
Okay.
Wonderful. Let's do the diagram. With diagram, one more time I'll explain. Oh, like that. Tell me the current financial year.
24, 25.
Donkey fellow. Donkey fellow, donkey fellow, donkey fellow, donkey, 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 donkey. I'm telling this is Jan to December. Is in 24, 25. 24 only. 2024. When you have 2 days coming from 2 financial year. 1st March from one financial year. 31st March from 2nd financial year. Then we say 24, 25. 11th, since 11th I'm screaming and telling. Donkey fellow. 1/1/24 is the beginning of the year. Shh. Year end. 31/12/24. Very careful. Interest dates.
38.
Interest date. All of you.
38.
I'm not taking class. Go. I'm not taking class. Go. You talk. No problem. I'll not take. I'm not taking.
36.
I am asking question. You guys are talking within your cheating. Now, interest dates. Any other date given in the question? Purchase date. When? 1 October 24.
110.
After 30 June or before 30 June?
After 30.
Kausi. நல்லா இருக்குமா கிளாஸ் now 1 October 24 1/10/24 what is happening? Ram is purchasing 1009% bond at 102. Oh, come interest. So 1000 at the rate of 102 come interest. Previous year 2023 interest date 30 June and 31st December. So can I say previous year interest already paid previous year?
Yes, sir.
Previous year interest is getting carried forward current year? No, leave it. My question to all of you, from 1/1/24 to 30 June 24, who was the holder of the bond or debenture? Sham. He was a holder. Did he receive the interest?
Yes.
Sir, on 30 June, if you open the register holder ka name, if you take the register, whose name is appearing? Sham's name is appearing. So company will pay interest to whom? Sham. So can I say from this period to this period, I have to do nothing in the books of Ram. Then from 30 June to 110, during this period, who was the holder of the investment?
Sham.
Sir, again Sham. But the interest for this period, who will receive? Ram. That interest, who has to pay in advance? Ram. To whom? Sham. When? On the date of purchase, 110. Now, from 1/10/24 to 31/24, sorry, 31/12/24, who was holding the debenture or bond? Ram. Clear, not clear? Now, Ram is getting one interest on 31/12, which is from 30 June to 31 December. For how many months? 6 months. In that, he is eligible for how many period?
3 months.
3 months. He'll get 6 months interest, but he's eligible only for 3 months. So 3 months, if he keeps it, remaining 3 months he has to give to whom? Sham. So from 6 months interest, what he'll receive? If you minus the interest to be paid to Sham, I'll get the remaining 3 months ka interest. Any difficulty? Diagram is clear, not clear? Clear or very clear? Or super clear? Ah, very good, very good. Bus, improvisation, bus. Now, we are recording the journal entries in whose books of accounts? Ram. Okay. Before that, let's do some calculation. Before joining this calculation, first calculation. Calculation. Interest नहीं रे. Call cost. सब निकालो. देख मैं कैसे निकालूं. Calculation of cost of investment. Now, tell me what is the value? What is the value? What is the value that has been transacted between Ram and Sham? What is the agreed value between Ram and Sham? Which broker has finalized? Which broker has finalized? 1 or 2? So purchase price of investment now including interest is 1000 into 102. How much? 1,02,000. 102. Okay, 1,02,000. This purchase price is including investment. Now, if I don't do any adjustment plus and minus, if I close it, 1,02,000 becomes a cost of investment, which means you will be debiting this in the investment account. Is it right? In this 1,02,000, interest component is there. Interest component we have to debit, but not in investment account. We are debiting interest account. But it is sitting here. So should I add or minus? Minus. So minus interest. Don't buy it. Understand the logic. CA final people, some people, I ask question. Why are we minusing the interest component from purchase price? Nobody is able to explain. You will become a best CA when you know. When question is being asked, you're able to conveniently explain the people the concept. You will be questioned from nook and corner. When you go for articleship, your junior will not spare you. Whatever he could not learn from the teacher that time, he will come and ask the question from you. Senior will take the frustration on you. The employee CA will ask question to you. Principal under which you're working will ask question to you. Client office, client will ask question. Client office, the accountant also will ask question. Either Tandi, if you have any relative by chance who is studying CA, junior, senior, he will also not spare you. You will get question from every possible angle. No, intermudistella, solli. So fear all of them, not ICA. Fear them and study novel. ICA will ask question one time and will pass you. These people ask lifelong, like how you are asking. Less interest to be paid to Sham. Tell me people, how many months of Sham's interest I will receive?
3 months.
Up to 30 June, anyways, he was holding it, he got it. His investment up to 30 June, he got the interest. But his investment of 3 months, I will get it. When on 31 December? 3 months interest, I will get it. That we have to pay him in advance. We have to pay that interest in advance. So interest is always paid on the paid up value. Paid up value. Paid up value is not given. So we'll assume the paid up value is equal to face value. So 1,000 into 100, how much? 1 lakh into 9 by 100 will give interest for entire year. But do you want for 3 months? We want for 3 months. Because Sham was holding the investment from July, August, September. October we got it. July, August, September he was holding it. So this is from July to September. 3 months interest. How much? 2,250. Okay. If I minus this, what will I get? 750. Okay. This is called as purchase price of investment X interest. And this was what given in the previous question. In previous 2 questions, they gave you from here. You continue the question from here. In this question, we got one step ahead. We got from top. We got one more extra thing to do. This is 1 or 2 come interest. What is interest value for minus? Interest value per debenture or per bond. 2250 divided by 1000. How much? 100. Donkey fellow. Who is that? Madhu. Application of mind karna. 2250 is for 1000 bonds. For 1 bond, how much interest? 2.25. If I minus it, what is the X interest price? 90? 9.75. This is X interest price. Oh, that's all. This is the concept. For this, you're taking so much stress. Okay. Now, with the purchase price, you have to add three costs, which is incurred directly in relation to acquiring the investment. Add that. So add brokerage. Be very careful.
1,00,000.
Brokerage is a charge that is being charged by the broker on the value that is finalized between the party. Between the party, he has finalized X interest transaction, come interest. Come interest. So he'll charge interest on come interest value. So now 1,000 into 102, how much it is? 1,02,000. Understand, don't multiply by face value here or paid up value. That is for interest calculation, not for brokerage. According to broker, between the party, what is the transaction? For 102 rupees per bond, per debenture. For 1,000, how much? 1,02,000 into brokerage percentage, 2%. 2,040. Always on transaction value. Always on transaction value. I gave a comment also besides. Now, add stamp duty. Stamp duty is always calculated on the pure purchase value. Please tell me, why will government take the interest? Sorry, why will the government calculate tax or stamp duty on the interest factor? Hello? Interest is income. On that, income tax will be charged. Stamp duty means what? To buy the asset. To buy the asset, what is the asset value that you exchanged? On that asset value, stamp duty will be charged. If I'm buying land for 1 crore rupees, on that 1 crore rupees only they'll charge me stamp duty. You pay anything else to the opposite party, we are not bothered. For example, in some cases, what happened? You buy land. Example. Sometime in land, a lot of trees or plants they grow. So generally, the cleaning work has to be done by whom? The seller and do. In some cases, seller is very poor. He can't do it. So buyer says that you clean it, I'll pay you. You clean it, I'll pay you. So he paid 10,000 extra for cleaning the land. So he paid 1 crore 10,000 rupees. Will you charge the stamp duty on 1 crore 10,000 rupees? Government says that between you, what is the deal for the land? What is the land dealing value? What is the land dealing value? On that land dealing value, you're supposed to pay tax. So here, between buyer and seller, what is the bond dealing value? 99,750 is the bond dealing value. Interest component you pay, you don't pay. Government has got nothing to do with that. Government says that interest is dealing between you. On that, stamp duty will never be charged. Stamp duty is charged on the investment value, not on the interest value. So now tell me, I will charge 0.5% stamp duty on what value? 99,750. Is the logic clear? 99,750 into 0.5%. How much it is? 499. Any other charges?
No.
That's all? Okay. So what is the total cost of investment?
1,02,289.
1,02,289. That simple it is. Cost of investment. Next, what calculation?
Interest.
Interest calculation. What interest calculation?
To be received. Next 3 months.
Which 3 months? Total 6 months or 3 months?
Total 6 months. 3 months to be received.
So we want what is the interest that we're going to receive from the company. So working note number 2, calculation of interest to be received. We will receive interest from the company from up to 30 June. Sham got July, August, September, October, November, December. 6 months interest will get. So July to December. Interest is always paid on the paid up value. So what is the paid up value? Nothing given means equal to face value, 100. So 1,000 into 100 is how much? 1 lakh. On that, 9% into 6 by 12. How much?
4,500.
4,500. That's all. Journal. On which date? First is on the date of purchase of the investment. 1/10/24. 9% bond account debit. Interest expenditure account debit to back. So now bond value will come from the investment calculation. 1,02,289. Now you understood why did I exclude interest separately from here? Because interest is separately captured in different ledger. So if it is come interest, always minus the interest. We can't include in the investment value because we are creating a separate ledger for it. And that interest is how much whether we are going to pay. 2,250 is the interest that we are going to pay. 2,250 interest is going to be paid. So 2,250. Both are coming from working note number 1. Both coming from working note number 1. How much is totally paid?
1,04,539.
529.
539.
39. Okay. Very simple formula. Next is happening on what date?
21st.
After 110, next date is on 31/12/24. Any accrued interest? No. So on 31/12/24, first you'll receive the interest from the company. So bank account debit. Bank account debit to interest income. To interest income. How much?
4,500.
You already calculated working note number 2, 4,500. Give reference to working note number 2, 4,500. And the net amount should be transferred to the P&L account. So that just write the entry and limit, amount will do after ledger. So 31/12/24. Interest account debit. Guys, to create income credit, to close income debit. So interest account debit to P&L. Amount will take it from the ledger. Slow down. 4,500 interest income minus 2,250 interest expense. What is the net income?
2250.
19? Hey, 19 will not come.
2250.
Donkey fellow. 2250. 2250. I don't trust your brain. That's why I got your calculator. In calculator also, if you make mistake, then I can't trust your calculator also. How many columns in each side?
5.
Main column, 3 column, face value, interest, amount. Do it first. Heading first. 9% bond in X Limited. Do it fast. We just have 2 minutes to wind up. Date particulars, face value, interest, amount. Date, particulars, face value, interest, amount. So first date is 110/24. To bank, face value please. 1,000 bonds into 100 rupees per bond.
1 lakh.
1 lakh. Interest that you have to pay 2,250. Investment value. Investment value 1,02,289. Not 90. Who said? That is excluding brokerage and all. So you have to include brokerage and do. So you take the value from the journal 102,289. Then interest date on 31/12/24. Buy interest.
By bank.
Sorry, buy bank. Sorry. Buy bank. 2,000. 4,500. Okay. That's all. That's all. Now closing balance. 31/12/24. Opening balance of face value 1 lakh on debit. Nothing in credit. So balance is going to be same. 1 lakh. Buy balance carry down. Interest for the no leave interest amount debited 1,02,289. Nothing in credit. So same 1,02,289. Interest will come on the opposite side. Always income is going to be positive here. It will never happen that you have to pay more and earn less. Not possible. Can you foresee a situation where you'll pay Sham more than what you get from the company? Will you ever pay interest more to Sham? How much you're going to get from the company, that part only you're going to pay to the Sham. So 31/3/24. Sorry, 31/12/24. To P&L. How much? 2,250. That's all people. This is the concept of cum interest. What is bothering you in X interest and cum interest? Tell me. All of you, say thanks to Hari. Say thank you, Hari. Because we completed one concept today. Oh, okay. Purvi also. Thank you, Purvi. Siddhartha, thank you, Siddharth. Like, tell all of you, not me. You should be thankful.
You, sir.
Thank you. So now the basic part is over. Complicated part is still pending. So that I'll be doing in the tomorrow's class. So tomorrow's class exact timing I'll be updating by evening or tonight once ma'am has a discussion with Rajat sir. Okay, ma. Chalo. Let's wrap up. That's all from my side for this session, people. And see you all in the next class. Until then, bye bye. See you. Take care. Stay back. Don't go anywhere. Online people, stay back. Thank you. Offline, stay back. Online, stay back. Record people. Bye bye.